Let's make sure that these are working. Good morning. Yep, Kick's working. What YouTube? YouTube is also working. Cool. Because all the cool kids are using tradingview.com. Ninja Trader, huh? I know what I need to do. What's that dealership's name? Hey, there's an online assistant. So high was 1941. Low is 8. So currently at 18. But the low was 828. Prediction is a down going into the bear market. We'll see, because it's coming back up. So that's a big. Oh, nice. So that's working. Just became my favorite thing. See, so trend went up like this and down like that, right? So here. And I could show this last thing. Alright. What's the playback? Color. So comes back up. I think. Oops. Come in like that. 18. Where's the eraser? Little sensitive. It's that bump right there. It's got decent volume. So we may be seeing some major changes in Dogecoin today. Let's see what happens there. We'll bring it be monitoring Dogecoin, see what's going on. Where is the eraser? Get that. Where's the highlighter brush? Narrow, 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 narrow. What's the mark here? 1870s. Maybe the shot up there. We'll see. Good shot down. Here. It's that bull and bear market thing. Spread it out. Pro feature. Okay. So I don't know. We'll see. We will see. Put on some YouTube. Schwab Network Live. Earnings alert. Ticker chart.
For their operating profits, they're looking at $1.81 billion. That is better than the $1.5 billion that was expected. The analog revenue, an important number for them, $3.92 billion, handily beats the expectation for $3.68. As far as their guidance for this current quarter, second quarter EPS, they're saying a range of between $1.77 to $2.05. Their revenue for the quarter between $5 and $5.4 billion. The estimate was looking for about 4.85 there, so considerably better than the estimates. As far as that EPS range, $1.77 to $2.05, the consensus was about $1.58. So both of them well above in terms of the entirety of the range, likely why we're seeing this 5% pop to the upside. KG, what are some of your initial takeaways as you're just getting a first look at these numbers?
Well, I would say that it's a little bit more of a lower bar going in. They did have actually a really good quarter last quarter, but now that you are seeing a little bit more of a follow through, the beat to the upside when you're looking at revenue is not really that great. But when you're looking at the CapEx, that has been the concern for this name, which is why it has been compressed or was compressed in price action over the last, let's say, year and a half, 2 years or so. They have made some adjustments, especially when it comes to their expansion strategy. They pulled back on that a little bit. And that's exactly why we are seeing this CapEx spend be a little bit less, coming in lower than the street's expectations. They are seeing some top line demand. Analog is also kind of bouncing back here. That's been kind of in that recessionary phase when you're looking at the industry. And that's why we're seeing this fuel higher. Technically speaking, that 240 level was a breakout point as well. So this is also maybe a little bit more of a squeeze on the options front for those players that were looking at the call side options in order to get exposure.
Yeah, and in a conversation I had about this one, free cash flow rebound was important. We did see that come in at $1.4 billion, better than the $1.2 billion expected. Some of that CapEx rolling off, but Tesla's numbers coming across a bit early, a change from last quarter. So let's jump into Tesla right now, take a look at what we're seeing here. EPS coming in for the first quarter at 41 cents. The estimate was looking for 34, so that's going to be a beat there. For first quarter revenue, we're looking at $22.39 billion.
Let's see what Tesla's got going on.
0.19, so a beat, not a huge beat there, but still a beat nonetheless. Gross margins coming in better than expected at 21.1%. Estimates were looking for 17.7% there. Free cash flow coming in at $1.4 billion. The estimate was looking for a negative $1.86 billion. As far as their Cybercab semi-megapack, they're on schedule for their volume production. Also seeing a rebound in demand in the North American and the EMEA markets. And also looking at Cybercab Tesla semi-megapack production starting all this year. All of that on track, and we are getting the first quarter operating income number coming in at $941 million. Estimate was for $787.7. Now, their Optimus line, this was another conversation, their first generation production line for the Optimus robot, that is being installed right now. They say they continue to see tailwinds persisting in their auto business. And
this is old.
Received approval for full self-driving in the Netherlands in April. So a lot of announcements here. Also launched unsupervised robo-taxi rides.
It's 11 days ago. That's why it's 11 days ago.
The explosion of AI, and you've got these long-term holders that are finally back in the green and probably adding to their positions. I just think it's going to continue to add buyers to this stock and push it up, until, as Patrick mentioned, we get a little bit of a, consolidation or pullback in the AI names.
All right, but no pullback in sight for Cisco right now. You've got three really steady upward movement charts today, and Cisco no different.
Right, so all three of these charts, as you say, at the highs, more
Roblox.
or less, Cisco,
Roblox.
those intraday highs, 92.
Still not
So
doing
far,
great,
pretty close
but
to the highs of the day, additionally. So the 90 level, old high, and the 88 level, another old high too, and a subsequent low. Those are areas you could watch if you're looking for some kind of downturn, for a buying opportunity, or if you had a more bearish outlook here. So upward sloping channel type shape here, remaining fairly consistent as well so far. When we assess our moving averages here, again, same thing here, where we have our short-term dark blue 5-day EMA within the boundary of our prevailing pattern here, in this case 90.45, then our teal 21-day 86.49. So the theme for all of these is that they're all diverging farther apart from each other. Price remains above all of them. Not really seeing any signs of any potential trend interruption. That's the kind of things you would start to be on the lookout for if the shorter-term moving averages start to break down, price starts to slip below them here. RSI in this case is entering the overbought area once again. Some people might argue that there's some bearish divergence here. To me, RSI is very nuanced. I think we kind of already had the reset here, where we pulled back to a supportive level in our trend line here. So while this is a tiny bit of a question mark, if we do start to make new relative highs beyond that old peak, that would be invalidating of any kind of bearish outlook here. And really, to me, the entry into the overbought area is typically more significant than a small amount of divergence in the short term here. So we can also see now a small volume node here around this general area, 82, 82.50 or so. That's the only thing that we have to work with anywhere really close to our current activity. Very heavy node here, though, around the 76 to 78 level or so. That's the most important trading area on this chart that's in the near term.
Yeah, and we're considerably above that, almost $20 above that range with that move we've seen to the upside in Cisco. But Cisco having a nice day today, up more than 1% at 92.53. Tim, want to thank you for being with us always on Fridays. We hope you have a wonderful weekend. And I just know it took everything inside of me not to sing Cisco's most popular song after you made that joke. But I held it in, and I'll sing in the commercial break. But thanks to Tim Bowen, Chief Technical Trainer at Stocks2Trade.com.
she said it, not him. So
for always breaking down the technicals for us.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets...
now this is bonds, so
at 10 a.m. Eastern on Schwab Network.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education.
put that on mute for now. Let's hear this. I think I will read it.
Ramallah, Palestine. The General Assembly of Arab Palestinian Investment Company, APIC, convened its extraordinary and ordinary meetings on Monday, May 4, 2026, in Ramallah, Palestine. The meetings were chaired by APIC Chairman and CEO Tarek Agad, and attended by members of APIC's Board of Directors, representatives of the Ministry of National Economy, Companies Registrar, the Palestine Capital Market Authority, the Palestine Exchange, the company's external auditors, legal counsel, and many of its shareholders. During the extraordinary meeting, the General Assembly ratified increasing APIC's authorized capital from $160 million to reach $180 million. At the ordinary General Assembly meeting, the General Assembly approved the distribution of dividends to shareholders of record as of the date of the meeting, totaling 8% of APIC's paid-in capital of $160 million.
Let's pick a different. Let's see if we can get a different voice. Let's get. Let's go with.
Ramallah, Palestine. The General Assembly of Arab Palestinian Investment Company, APIC, convened its extraordinary and ordinary meetings on Monday, May 4, 2026, in Ramallah, Palestine. The meetings were chaired by APIC Chairman and CEO Tarek Agad, and attended by members of APIC's Board of Directors, representatives of the Ministry of National Economy, Companies Registrar, the Palestine Capital Market Authority, the Palestine Exchange, the company's external auditors, legal counsel, and many of its shareholders. During the extraordinary meeting, the General Assembly ratified increasing APIC's authorized capital from $160 million to reach $180 million. At the ordinary General Assembly meeting, the General Assembly approved the distribution of dividends to shareholders of record as of the date of the meeting, totaling 8% of APIC's paid-in capital of $160 million. The distribution includes 5% in cash dividends amounting to $8 million and around 3.1% in stock dividends equivalent to 5 million shares. Following the distribution of stock dividends, APIC's paid-in capital will increase to $165 million. The General Assembly also elected a new board of directors for a 4-year term. The board comprises 11 distinguished business leaders, bringing together a diverse range of expertise across investment, corporate governance, manufacturing, trade, services, finance, and entrepreneurship. The newly elected board members are Tarek Omar Agad, Tarek Sheikha, Hashim Shawa, Mesa Barensi, Mohammed Aboukiazaran, Riham Hussein, representing National Insurance Company, Reyes Baitani, independent member, Dr. Mazen Hassauna, Nashid Masri, Lana Ghanem, and Ahmed Atwan.
Watch list. Just the. Go with energy and minerals, finance, electronic technology, health services, health technology.
BV, Brightview Holdings Incorporated, is set to announce its Q2 26 results on May 5, before the market opens. The earnings are expected to be disclosed at 4:10 p.m. Eastern Time, 8:10 p.m. UTC. For Q2 26, revenue estimate is $638.80 million with EPS, earnings per share, anticipated at 10 cents. Learn more details at BV Financials page. Revenue and EPS values are provided in USD.
Let's see. Alert to list. So predictive flow. Yeah, it's not really. So it jumped back up here. And then it's been kind of back and forth. We went back and forth for a long time though. All right, let's see something here. $16 a month. Let's see if the feature I want is actually. We're going to learn how to use TradeView today. TradeView playback.
Use TradingView replay mode to backtest and practice any trading strategy. Let's dive in. And to access the TradingView replay tool, it's actually up here, just right to the
there it is.
You press on replay right here, and then when you press on replay, you can see that you will have this blue vertical line appearing. And right now, I'm recording this on December 28th, as I said, so this is the last time. But by using this tool, we can actually jump back in time. So let's say we want to jump back all the way back here to, let's just choose something random. Let's choose, you know, October 2024. Then we simply press right here, and just like that, you can see that we jumped back in time, and now the price, the last candle here, is all the way back in October 2024. So this can actually be a very useful tool, because you can practice, for example, you know, how would you have traded this chart? It's often much easier to look back at a chart and take a look at, you know, I would have done this, I would have done that. But when you use the replay tool, you get a more sort of live feeling. It's not really the same because you won't have the emotions you have in a real market. You know, when you're trading real markets, you will feel fear, you will feel greed, and so on and so on. And you don't really get that with replay mode, but it's definitely, you know, still a good tool. And one thing that TradingView has recently built in TradingView replay tool is that you can actually set you know, a profit target and a stop loss level, and you can practice your trading. But so now we are in the replay mode, and I want you to look down to this box right here, because here we have some important buttons. The first one where you can see it says
Post this in the chat. Make sure to give him a check. Check him out. Paste.
replay speed. When you click right here, you can see that this is basically where you choose how fast the chart will go once you press play. So if you want a super fast chart, you can choose 10x. That means that you will get 10 new candles every second. And maybe you want to go super slow. You can have one update per 10 seconds. But let's use a good balance here and choose that we will have one new candle per second. Then we just choose 1x right here. And to play the chart, you simply press this button, or you can press shift plus arrow down. So let's play out this chart, and now you can see that the price start to move. So this is exactly what you're seeing on the chart right now, is exactly how the price moved in the past. But now let's actually press pause here for a while, because I want to show you guys a very cool feature, and that is that you can practice your trading while using the replay mode. So what we can do here is that we can actually, if you go up to the upper left corner, you can see that it says buy right here. So we can actually, let's say that we found a setup right here. I'm not saying that this was a good trade, but just for educational purposes, let's say that we found a good buy signal right here. Then we can just click buy right here, and we have a few different order types. You have the market order, so you can see we press market right here. That means that you are buying at the current price. And in this video, I don't really have time to dive deep into all of the different orders. But for now, you just need to know that market order means that we are buying at the current price. And you can see that right now, Bitcoin is at 69,000, or it at least was at that level. Remember, we're looking back in time. But when you click buy right here, then you simply, you know, of course, this is not real money, but you bought with fake money right here. We will talk more about that later, how you can practice in TradingView. But here, you bought at this level, and what you can now do is that you see you have one button that is called TP. This is the level where you will automatically take profit. So let's just say that we choose a random take profit, maybe up here, so up at 5,000. So that is our take profit. And let's say for simplistic sake, our stop loss, you know, maybe above this, maybe about that recent low, just to show you guys. So now we have a level where we will automatically lock in profit. We have a level where we will automatically sell. And this is a common mistake that beginners make. They forget that they need to click confirm. So you need to click confirm right there in order for the trade to be active. You know, I think that is on TradingView side, it's a little bit easy to miss. But now we are essentially in this trade, and you can see that by looking at this blue arrow right here. So now we are in the trade, and what you can now do is that we can press play here.
Like from New York City this morning. Good morning.
watch list. Speak.
Your watch list reflects a diversified interest in traditional finance, TradFi, digital assets, crypto, and hard commodities. One market theme, the convergence of assets. The primary theme in your watch list is a barbell strategy balancing established financial institutions, JP Morgan, Citigroup, Fifth Third, with high volatility digital assets, Bitcoin, Solana, Dogecoin. This suggests a focus on both stable dividends/income and speculative growth. 2 Relative performance versus market. As of May 4, 2026, your financial holdings, JPM, C, FITB, are seeing slight downward pressure, consistent with broader banking sector trends, while your crypto holdings, BTC, ETH, Doge, are showing resilient gains. Bitcoin's current price above $79,000 indicates a strong bullish trend in digital assets compared to the relatively flat performance of the S&P 500 financial sector, XLF.
Right.
So which is it? When it comes to this potential control zone or enhanced security area, who actually has control right now? We understand the U.S. blockade is working, but does the United States really have control and are able to guide electronically ships out of the Strait of Hormuz? The next few days are going to be critical to see if that's working.
We'll stay on top of that story for you. Equity futures so far this morning negative by just 0.1% and well off session lows. Under surveillance this morning, a failed bailout attempt.
Spirit Airlines ceased operations. So if you have a flight scheduled with Spirit Airlines, don't show up at the airport. There will be no one here to assist you. Now, you've heard that other airlines have talked about requesting a $2.5 billion bailout. I would say that at this point, I don't think it's necessary. If they want to come to the U.S. government, we would be a lender of last resort.
So here's the latest this morning. Spirit abruptly shutting down following a surge in fuel prices and a failed government bailout. Bloomberg's Tyler Kendall has the latest from Washington. Morning, Tyler.
Hey, John, good morning. Well, a person familiar with the matter tells us that it became clear to the White House last Thursday that a deal couldn't get done. The U.S. government had been considering a $500 million bailout in exchange for warrants to purchase up to a 90% stake in the company once it emerged from bankruptcy. But the U.S. Transportation Secretary Sean Duffy there went on to say that at the end of the day, it was a creditor issue, as the Wall Street Journal reports that a group of key bondholders felt that they would be better off with Spirit liquidating rather than agreeing to the government's terms. President Trump repeatedly said that he was interested in trying to help save the company in a bid to save jobs. In fact, we had reported last month that the administration was even considering invoking the Defense Production Act in an emergency effort to keep the company afloat. This tracks with perhaps the more hands-on industrial policy from this White House, considering the U.S. Commerce Secretary Howard Lutnick was the one leading these negotiations, of course, a leading voice in that U.S. government deal that we saw last year with Intel. But John, as you well know, this company had been struggling for years, but its issues were really compounded by the fact that we are seeing this surge in fuel prices due to the closure in the Strait of Hormuz. And the Transportation Secretary alluded to it there. We heard from the Association of Value Airlines, which represents other low-cost carriers. They're asking this government for $2.5 billion in assistance, but so far, the administration has said that's not going to happen.
Tyler Kendall with the latest in Washington. Tyler, thank you. Let's go through some simple questions. Could this airline stand alone? No. Would a combination with JetBlue have made things different? We'll never know. But the market offered a potential solution to all of this about a year ago, and it was blocked on the grounds that it would reduce competition. What have we ended up with a year later? Less competition.
Less competition and also less jobs. There are a number of jobs now that are going to be lost because Spirit is obviously bankrupt and they are no longer flying. A number of planes also that are just left now and routes that are not being flown at all, and individuals flocking and potentially having to pay double the fare or higher prices to get a flight. The other issue, of course, is if you take the flip side, say this merger did go through and Spirit was really, really bad, which we know they are. Could that mean that the bigger JetBlue Spirit also be in a position much worse today than they would have been had they not brought on Spirit?
Senator Warren is attempting to deflect blame. Of course, she was part of the big push to block this combination under President Biden, saying that Donald Trump's war with Iran caused the sky-high fuel prices that finally did Spirit Airlines in.
I'm not sure it was just the fuel prices that did Spirit Airlines in. Remember, Spirit Airlines already filed for bankruptcy twice. They filed for bankruptcy twice, this company. So I'm not sure it's really the jet fuel, especially given the jet fuel issue is really at this moment hitting Europe more so than it's hitting the United States.
Joining us now to discuss is Henrietta Trace of Fader Partners. Henrietta, welcome to the program. Do we need to rethink in Washington about the kind of deals that make sense and the ones that don't?
Actually, I had a really amazing weekend up in Canada with members of parliament and trade teams and the business councils up there. And one of the things that they're most focused on is understanding what Mark Carney is going to do on the Sovereign Wealth Fund and what Canada is going to invest in. You know, they're talking about defense, they're talking about industrial and manufacturing. And it begs the question, what is the United States going to invest in? We obviously have seen the president try to invest in Intel, and he's taken a very hands-on approach, as Tyler just walked through. But they made the judgment that Spirit Airlines wasn't going to be one of those pieces that goes into what the United States decides to permanently invest in. And we've seen how those play out, from an auto bailout to the farm bailouts, bank bailouts. You know, we can get into the weeds. And I think the other dynamic here is that obviously Spirit's had issues for years. That's not up for debate. But when you put 84% increases in a very tight margin industry on their main cost of fuel, that's the end of the story. So calling attention to that for whatever the duration of this war is going to be, and having sort of the first American casualty of the war and the higher jet fuel prices is probably a bad look for the administration. So that combo makes a lot of sense to me.
Henrietta, do you think now, given, I mean, me and Jonathan were just talking about the fact that there was potentially an off-ramp for Spirit when it comes to JetBlue and the Biden administration blocked it. Do you think potentially now members of Congress would get on board if we were to see more consolidation in this space?
I think it's a lot to ask of members of Congress to get on board to do anything. These guys are barely functioning right now. As you saw, the House went on recess instead of staying in session. They are just coasting on their own jet fumes to get to the midterm. So I don't think a bailout or even an organized, coordinated approach, unless the war really does collapse whole industries, kind of like what the airlines are alluding to and what the whispers all are. I don't see Congress wanting to weigh in here. It paints a bad picture for the administration, and that's not what Republicans want to provide to the president going into this midterm cycle. So I think they probably just stay away.
But Henry, are you saying that members of Congress actually think Spirit collapsed because of the war in Iran? Because they've been struggling for years and in August filed for Chapter 11.
Right. No, I think it's a combination of both. I mean, the problems have persisted for years. They didn't think it was worth it to bail it out. But, I mean, 84% increases in jet fuel is going to do it for you. So whether it's the entire story is not correct, but it is obviously the straw that broke the camel's back. And there's no restraint from Congress on the president to wind down the war. And I think that needs to be really internalized, that there is not material pressure on the president to end the war immediately. A lot of Republicans would say, don't waste this crisis. We're here now. Let's see what happens. It's worth it. And if they wrap their hands around the idea that, avoiding an IRGC with a nuclear weapon is worth the price of Spirit Airlines, so be it. I think that is what a lot of members would say right now.
Well, if this is the case and it's higher fuel costs, what do you think the Department of Transportation should be doing right now with other budget airlines?
I mean, hopefully preemptively getting them to avoid going into this kind of dire last-minute situation where you can point to, a Thursday like last week and say that was the make or break point. If you want to get out in front of it, you really need to create something. Throw it in the Farm Bill, throw it in forthcoming CR. Give assurances behind the scenes. Let Treasury kind of work something out so that they can get some sort of swap line in through there. Those are all options that we've seen either through the pandemic or through the Great Recession that are available to these agencies. They just have to want to do it. And I imagine that there are teams at Treasury working on that right now.
Henrietta, when did we become so scared of markets? When did this start? How many decades
How
ago?
turned?
Like just free markets, you mean?
Precisely.
Well, I mean, I think that the federal government decides to step in a lot. I mean, I am not really that old, but I've already seen bailouts of so many sectors, like the auto bailout. I mean, at one point there was a request to bail out golf clubs during the Great Recession. There are bank bailouts, there are farmers bailouts. We're on our 4th farmers bailout in the Trump's term. For the 2 terms that he's had so far, number 4, and we're asking for a 5th. I mean, we intervene a lot.
Henrietta, appreciate it. Henrietta Trace there, of Vader Partners, down in Washington, D.C. I see a lot of politicians rage against capitalism all the time. I'd like them to identify what do they think is capitalistic about the current environment.
You mean taking equity
You
stakes?
should want a process of creative destruction. I know it's brutal, it's painful, particularly for the wrong end of it. But also the market, the free market, did provide a solution in the last year, and the government blocked it. And I know everyone wants to move on from that because we've had an energy shock. I haven't seen Ryanair go under in Europe off the back of this energy shock. I think we've got to talk about, yes, this was a business model that was struggling to stand up on its own before this energy shock, but the market offered a solution and the government blocked it.
Right, or EasyJet or Wizz Air, a number of these European airlines, which actually Europe is being hit hardest when it comes to jet fuel, and the Commission actually is going to put out tactics some of these airlines can use in the next few weeks and months, given the fact that the situation in Europe is so much worse. But to your point, there was a solution to this. Spirit has been in trouble for years, and JetBlue was willing to take on that problem, and the Biden administration blocked it. Now, what we do not know, though, is that would that have been beneficial, or potentially would it leave JetBlue today in a worse condition because they would have taken on this massive problem?
That debate will continue, no doubt, in Washington, D.C. For the here and now, equities recovering well off session lows. We're down by just 0.1% on the S&P 500. Energy elevated, still in triple digits on both WTI and Brent crude. The last 90 minutes in financial markets. This is why people are so exhausted. You see headlines from Iranian media suggesting a U.S. ship has been struck in the Middle East, and then you get the official denial from the US, and still some of the move actually holds this morning, still in the bond market too.
Well, the move holds because there's a lot of confusion, and there's really still this impasse, and there's no agreement about actually guiding ships through the Strait of Hormuz. We haven't seen
No U.S.
the
Navy
president's
ships have been
directive
struck.
actually take shape right now. And that's why you have this confusion. That's why some people just want to stay on the sidelines.
Up next on the programme, we'll talk about energy. We'll catch up with Susan Bell of Rystad Energy with oil rising on reports of heightened tensions in the Middle East.
How's Nike doing? What is Z? I'm not doing too great. Adidas, maybe? Yeah, that's Adidas. $87 a share versus Nike. $44 a share.
tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
ETF IQ, huh?
Welcome to Bloomberg This Weekend. I'm David Gura.
Yeah, more commercials. Commercials. Switch to Schwab, see what they're doing. Commercials. Nope, Apple.
More than half of the revenue for Apple there, and that was just barely ahead of Wall Street projections. I'd even call it in line, but it was the second consecutive quarter of more than 20% revenue growth in that segment. So I think that's what really matters here, not the inline number, but that we've still got 20+% growth. The Mac also increased. 8.4 billion was the revenue there. iPad to 6.9 billion. Wearables and home accessories brought in 7.9 billion. And then services, that's their second largest business, that generated revenue of $30.97 billion, which was also better than the expectations. And in the same quarter, in the year-ago period, they were at $26.64 billion. So some really nice acceleration and growth there as well. The other real standout here was the Greater China revenue. And I don't know that it was a surprise because we had already gotten those China numbers in terms of the iPhone performance in the first quarter. But revenue improved far more than even analysts were expecting. It came in at $20.49 billion. Analysts were only looking for 18.9. Also, guidance, a big mover here for the June quarter. Apple expects revenue to grow 14 to 17% year over year. That's significantly higher than the 9% growth that was projected. So I think a lot of that is why we're seeing that turnaround here. And also services revenue expected to grow at a similar rate to the 16% growth that it saw this quarter. So no deceleration on the front for Apple here.
And amazingly so, I know that we talk so much about like their other aspects of their business, like services, as you mentioned, and some of the improvements in China, but still 51% of their core business is the iPhone. So that extraordinary demand that Tim Cook mentioned, I mean, there's a reason that's resonating so well with the street when that's the bulk of still your business, or at least the slight majority is in terms of the iPhone. So a really great report. Nice to see it hold. I agree with you. You can never guess what the market is going to hold onto and perhaps disregard, but seeming like a clean reaction, at least today, as it stands for Apple shares. But appreciate it to Marley Caden, host for the Schwab Network here. But now let's take a look at trading Apple for example purposes with Dan Deming, managing partner at KKM Financial. And so Dan, looking at Apple here, obviously a nice winning week for Apple shareholders. But when you assess looking at this name for trading purposes, walk us through your thoughts.
Yeah, Jenny, nice to see you again. It's been a long time. But yeah, it's I think this is an interesting price level right here, Jenny, when you look at Apple, as we're pushing up to those November highs. And to me, if you look at it from a technical standpoint, we could have put in a double bottom here to start the 2026 year. And if we're able to break through this 86 level here, which we're teetering on, then we could see higher price action here over the next month or two, I think. So I'm setting up a trade example today to take advantage of that, but still define risk. So today's trade example is call condor, where you're buying a call spread close to the money and then selling it further out of the money call spread. So in this instance, it's buying the 285, 295 call spread, then selling the 305, 315 call spread. You can do that for
Exceeded
about $2.60
EPS and revenue
versus the stock.
expectations.
So again, that costs you $2.60. That's your net risk, but it gives you a nice capture zone to the upside should we see a breakout as we move into June.
Yeah, and I will say such a good read on Apple, and also a good read on the overall market, frankly, because it's one of these names that is so exposed
Apple exceeds EPS and revenue expectations. Apple reported a diluted EPS of $2.01, surpassing the estimated $1.94, and revenue of $111.18 billion, which beat the expected $109.58 billion.
Let's do a spin this morning.
Trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how
Show me
complex.
Bitcoin.
Plus, get 24/7 live help and access support by phone, email, and in-platform.
It's trading. It's not going too bad. It bounced back up. Where'd the trading view go? Bring this back over here. This is Bitcoin. Can't do the playback. That's a pro feature, which I don't have yet. There's picks. More money. More subscriptions. $24 a month. Want to make a? Are we making bets on crypto today? Are we making predictions on crypto today? Mm-hmm. At 7.6. What is it? I alerted Bitcoin at 7.9. All right, Schwab's back on.
Just in the recent past, everyone has realized that other things are critical in the infrastructure side of things for AI, including good old-fashioned spinning rust, as we used to call it, hard drives from Western Digital. I think the really interesting story here is the way that Western Digital and SanDisk came together and then separated. We might talk about that. But really, the only question here is, are the numbers so good that this is the peak? And I think the market is reflecting that right now.
And that's a good question. Are the numbers so good that there's a peak here? Now, SanDisk has managed to turn higher, but Western Digital, it seems like it's hitting a ceiling. Matt, your take on these numbers that we got. I mean, SanDisk, strong quarter for Western Digital. Their revenue grew 45% year over year to more than $3.3 billion. What's your overall take?
I think both of them had good numbers. I think with Western Digital, part of the reason that it's not acting stronger is you had Seagate report Tuesday, so their closest peer, and Seagate just had a really strong quarter. Western Digital's gross margin guide wasn't quite as strong, and so I think the bar had been raised. Western Digital reacted positively to Seagate, and so it was just high expectations. To some extent, we saw that with SanDisk too. I think everyone knew that they had been more aggressive in raising pricing than their peers. So you got Samsung with some phenomenal pricing numbers in their first quarter, and with SanDisk guide, maybe a little bit lighter price-wise in terms of price increases than people expected. But having said that, they've got these longer-term contracts now that maybe elongate the cycle for them.
Dave, I want to go back to you. So SanDisk, to Matt's point, they now see quarterly revenue as high as $8.25 billion, profit well above expectations. How much better do you think it can get from here?
That's hard to say. Matt just mentioned the longer-term contracts and the attempt of management to sort of smooth things out over time. This has been a very volatile space over time, and any attempt to address that volatility seems to be front and center. So how high can they go? That's really hard to say. Are they durable over the next several quarters? I think yes, because I think that the AI build-out will continue. I think capital expenses that are deployed in the direction of AI will prove to be a positive thing, at least for the next several quarters.
And then, Matt, I got to ask you, you've got a $1,200 price target for 12 months out on SanDisk. You've got an outperform rating. I guess what gets it there, and are there any headwinds that you're worried about?
I mean, the only real headwinds I'm worried about are Black Swan event or some sort of demand destruction. So I think if you look at the memory stocks, when the Iran war broke out, there were concerns that potentially higher oil pricing, slower economic growth would create some dip in spending on AI, and so you end up with some shortfall in demand. That hasn't played out. I mean, I don't see a Black Swan event coming, but who does? I think the real risk is in late 27 when you get new fabs coming online. Historically, what causes cycles is too much production. Until then, though, there's not a whole lot that the industry can do to put out more bits. And so I think, we can argue about how much more pricing goes up, but I think the reality is it's going to go up.
Okay, so you think the reality is going to go up. So, Dave, let me ask you this. How much more and how much longer do you think pricing will go up?
Yeah, put an objective number on it is tough. I think it's going to go up. On the subject of Black Swan events, I'm not sure what color swan the event is when maybe we come to the conclusion that AI doesn't need the kind of infrastructure that we think it does as we sit here right now. That's another variable. Watch as we start figuring out how inference, in addition to training in the AI space, is actually conducted. And we'll see just how much memory and high-speed storage we need. On the Western Digital side, though, we need fat, dumb, massive capacity spinning disk storage. That's the headline for me. So yes, going up, but a year from now, you start getting into 2027, and it's unclear just what the infrastructure requirements will be. We're betting on sort of a static model right now.
Matt, and then I'll give the floor to you for the final word on this space. Dave earlier mentioned that he sees strength for the next few quarters. I imagine you have a similar perspective, and when I talk to different analysts, their view is, listen, when this space turns, it turns fast. How long is the runway?
Yeah, no, I think you need new capacity to really cause the space to turn. And we know that there are new memory fabs coming on the second half of 27, but there just isn't much until then on the hard drive side, you need new head fabs. No one has plans for a new head fab. And so right now we're looking at an industry where simply demand is outpacing supply. And so I don't think it's a 26 event that things turn. I think it's probably not a 27 event. I think we're probably looking out into 28 before we end up with oversupply and fundamentals falling down.
Okay, getting closer to the end of the decade with that view. Thank you, Matt. That's Matt Bryson, Managing Director, Semiconductor and Hardware Research over at Wedbush, and Dave Nicholson, Chief Research Officer over at Futurium. Have a great weekend, guys.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
You're watching The Wrap. I'm Jenny Horn, and before we close things out, here's a final look at the day's biggest stories and what's next on the horizon. We're looking at the major oil stocks amid the unresolved conflict in Iran. As you can see, some collective red across the board there. ExxonMobil down 0.9%, and seeing more than 1% losses now in Chevron, ConocoPhillips, as well as Shell and BP, which is actually the biggest laggard of that bunch, down 1.8%. But let's now go inside out on broader oil and some of these oil-related earnings. So joining us now is Rob Thomel, the Senior Portfolio Manager at Tortoise Capital. So Rob, thank you so much for joining us on this Friday. I know markets are higher, but where we're not higher are some of these oil-exposed equities, frankly. And so what was really your takeaway from, say, Chevron's earnings? I know, again, we're lower today, but modestly on the session.
Yeah, I think what Chevron's earnings were really emblematic of what the entire energy sector is facing, basically, right? So a little better than expected results for this quarter because of higher commodity prices. We all know, as you've talked about, why commodity prices are higher. It's all about the Strait of Hormuz. But as you look into the future, still some uncertainties, frankly, a lot of uncertainties regarding how much future volumes are going to be, what future prices are going to be, and it's all tied to, will the Strait of Hormuz open or will it not? So now, the one thing that I would say that a lot of energy companies are doing, which we're happy about at Tortoise, is we're seeing capital discipline, right? So even though commodity prices are higher, the oil price curve in the future is higher than what it was, last quarter, basically, and it's actually quite substantially higher than what it was last quarter. These Chevron and Exxon are not increasing their capital spending, right? So they're remaining capital disciplined. So what they're doing is continuing to generate high free cash flow yields, and then buy back stock and pay some really good dividends. So that's one of the reasons why I think investors really should look at the energy sector if you're underallocated to it, like a lot of investors are.
Okay, and so at a higher level, I mean, these results, would you say perhaps didn't really change any of the broader outlook for big oil this year? Would you say that both of these reports somewhat mostly confirmed what the market was already expecting?
Yeah, I think you're exactly right. I think the market did expect a little higher, or is expecting better results because of the higher commodity prices, and didn't expect to see any dramatic moves, I guess, in the stocks as a result of what were probably expected results. And the other thing I forgot to mention is refining margins actually have been very strong across the board in the U.S. as well, and so that's helped companies like Exxon and Chevron as well.
Okay, and so for those that are choosing, say, between the two, is it more about Exxon being a growth plus discipline story, or Chevron being more of a value and income player? Is there one that you particularly like more than the other?
We like them both, but what I would say is Exxon, the unique thing about Exxon is it's really capturing about everything, right? I mean, it's capturing international activity. It's capturing what's going on the Permian Basin in energy. And if you think about it, if you're investing in energy, you want to have exposure to the Permian Basin. You want to have exposure maybe to a little bit of international growth. But the other thing you want to invest in is AI, right? And so Exxon talked about in their earnings release an AI project, right, where they're actually going to provide behind-the-meter power, build an electric power plant, basically, in West Texas. It's supported by a contract with Microsoft. So Tech, Microsoft, Energy, Exxon getting together to build a behind-the-meter power plant to support AI development into the future. We like those type of stories where there's a combination of energy plus technology, because we think that this AI story is going to play out for an extended period of time, and there's some opportunities to invest in energy at much lower prices than what you're paying for technology stocks.
Okay, and I like that. I so agree. I like when something like the old school can bring in the new school, which it does feel like so many of these companies, these oil-exposed equities, are starting to really do, and starting to also channel on their earnings calls. So appreciate it. Really great conversation. Rob Thummel, Senior Portfolio Manager at Tortoise Capital. Thanks so much. But now let's get to some ways to trade these names when looking at ExxonMobil in particular with George Tillis, Senior Markets Correspondent for the Schwab Network. And so, George, when we assess some of the price performance today, I know we're lower collectively in a lot of these energy-exposed equities, but walk us through, you think, through trading a name like ExxonMobil post its earnings, of course.
Yeah, I mean, if you look at their earnings report, they actually had a charge-off based on some derivatives, but nonetheless, I mean, the stock is trading slightly to the downside, and it's actually not trading very aggressively in either direction. So with that said, today is Friday. That's what we're going to do in this case, is capture a couple of extra days of theta decay over the weekend. And what I'm going to do is I'm going to sell essentially some premium to the downside for Exxon. So it's trading around 153 right now. Basically going to sell 30 delta puts for May expiration in 2 weeks. So these are the monthly contracts. I'm basically going to sell the 147 cash secured puts, and you can earn about $2 in credit per share, or $200 a contract. So in essence, the whole premise behind the trade is that the stock could just drift sideways or higher, or even slightly to the downside, as long as it stays above 147 between now and 2 weeks expiry. That premium of $2, which is yielding around 1.5% to the strike price in 2 weeks, would erode to zero. So it's a credit-based trade. The objective is to just sell high and allow it to expire worthless. Now, if you do structure this trade, you have to be willing and able to take ownership of stock of Chevron. You would put the shares at 147. if the stock does close below that level or trade below that level by expiration, but your cost basis is 145. So the whole objective here is earn premium over time as the stock tries to figure out which direction it wants to go.
Okay, yeah, and I think that I know we're seeing a bit of a drift lower today in these names, but I mean, not a substantial down move. And I tend to look at some of these earnings moves, even if slightly lower, as somewhat of a win because we've seen names get punished for, frankly, a whole lot less. But so appreciate it, George Tillis, for running us through, of course, ways to trade ExxonMobil. And that's a wrap on today's market action. We're back every trading day with more insights, moves, and everything that investors need to know. Download the Schwab Network app and stream anytime at schwabnetwork.com. I'm Jenny Horn. We'll see you again tomorrow.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me. And
certainly entitled to his own opinion on the matter. He does not think that Kevin Walsh should be cutting interest rates here.
And maybe Kevin Walsh does have some cover. Remember, the Treasury Secretary saying that maybe right now is not the right time. Maybe they need to wait a few months before they start to reduce interest rates. But obviously, this is something the President of the United States would want to see. One thing that Bill Dudley does mention in this piece is that the persistent rise in energy prices shouldn't be dismissed as noise. The big question is, how long is this actually going to last?
In fairness to Kevin Walsh, he didn't make a big effort to communicate an argument to cut interest rates in the hearing.
No, and I think, and you've brought this up a number of times, I think one of the most important things he said was a little bit at shots thrown at team transitory, but something he might have to abide by. Inflation is a choice.
Up next, we'll catch up with Jitanya Kandari of Morgan Stanley, Tom Kennedy of JP Morgan Asset Management, Yelena Shuritseva of the Conference Board, and Kelly Kowalski of Mass Mutual. The third hour of Bloomberg Surveillance just around the corner.
A cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance.
flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
I would not be outright short risk.
Stay invested. Don't try to time this market.
It's a little bit of a high convexity trade still.
The market isn't necessarily going in and rewarding everyone.
We still think the broadening story is happening.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. You're opening about 90 minutes away. Equities into it look like this. Equity futures negative by 1/10% on the S&P, just about unchanged on the Nasdaq. In the oil market, an update on crude. Brent crude up by around 3% to 111. It was up by 5 a little bit earlier on the session on some conflicting headlines about developments in the Middle East.
But still holding on to some of those gains, and those conflicting headlines comes from Fars in Iran saying that they actually missiles hit a U.S. warship. CENTCOM said that is not true. One thing that we do hear, though, from the United Arab Emirates is that an ADNOC vessel was transiting in Hormuz, and that was hit by 2 Iranian drones. So what this does show is that the IRGC is still going after Western or Western-affiliated and their partners' vessels, and maybe that's why you're seeing this risk premium still in the oil market.
That's keeping crude elevated. Bond yields too, higher by 4 basis points on the session. Your 2-year at the moment at 392. Your 10-year north of 440. For the bond market, the next step, the next stage, is the data. It was all about earnings last week. This week is all about the economic data, and a big one is on Friday. Payrolls Friday just around the corner. The median in our survey, the median estimate is 65K. The high is 140, the low is negative 15, so the range is still wide.
The range is so wide, it's really, anyone's bet, like a casino, what happens on Friday when it comes to the payrolls report. But what is notable is that the U.S. economy has been resilient in the face of all these headwinds. Even Jay Powell said that at the press conference, the outgoing Fed chair, whether or not it was tariffs, whether or not it's the Iran conflict, you do see the economy and the consumer at the moment resilient. At some point, does it start to break, especially when you see gasoline prices ticking higher, closer to $5 a gallon.
We'll speak to the conference board a little bit later about confidence. When you say resilient, confidence is terrible. It is just on the floor right now, if you believe in the likes of you, Mitch. Rock bottom. Consumption's still okay based on the spending data we've seen. Retail sales has been okay. We spoke to Bank of America earlier on this morning, looking at their card data. That's holding up too.
When I say resilience, I'm talking about the data, because when you look at things like University of Michigan, it basically feels like a political poll, and also a place where people, of course, maybe when they say, how do you feel about the economy right now? Maybe they just went out and filled up their tank and they're saying, well, I'm annoyed. Well, of course, they're going to have that knee-jerk reaction, but individuals are still going out and they're still spending.
Futures this morning negative by 1/10 of 1% on the S&P, with the opening bout just around the corner. In just a moment, we'll catch up with Jitanya Kandari of Morgan Stanley, with stocks pulling back from all-time highs. Tom Kennedy of JP Morgan on the AI data center boom. Yelena Chudetseva of the Conference Board.
Looks good
gas
so
prices
far.
weigh on confidence. We begin this hour with stocks lower and crude rising as geopolitical uncertainty puts the record rally on hold. Jitanya Kandari of Morgan Stanley Investment Management writing, markets are acknowledging risk, especially on energy, but the dominant force is still earnings and AI-led capex, with geopolitics acting more as a volatility amplifier than a regime breaker. Jitanya joins us now for more. Jitanya, good morning, good to see you. Are these the trends, the forces you want to fight? If you're on the wrong side of this trade right now, how painful are things?
Yeah, it's a great question. I think what's happening on one end, as I said, is the AI-driven capex, which has been a bigger contributor to US GDP growth in the last year than consumption, which has traditionally been the highest contributor to growth. So I think there's merit in this momentum. What I do worry about is how the duration of the Iran conflict can finally come to roost. And at this point, of course, there are offsets. What's really interesting is that as much as US has energy independence, if you look at countries in North Asia like Taiwan and Korea that have exports to the extent of about $700 billion compared to past $250 billion, and you contrast that with energy imports, which is basically, energy importing countries are in Asia, energy imports are about $230 billion. So the gap between the export revenues and their energy imports is so high that even a tripling in prices doesn't really move the trade deficit. So what's going on is all of these offsets in the US, of course, with the lower gas prices, but even in other pockets of the world like North Asia, which are traditional energy importers, but have some interesting offsets. So we are really being discerning in terms of how we are investing, trying to buy uncorrelated sources of alpha wherever we can find them. And at this point, clearly, tracking how this duration of this energy disruption holds up.
I think for a lot of people, they've tried to make this quite simple. They've found some price-insensitive spenders right now, big buyers of all this technology, the hyperscalers in this country spending north of $700 billion, or at least intending to this year, and they're going to where the money's been spent. They're going to the chip players, and they've been piling into that trade, and that trade has moved from 40 to 50% off the lows from the end of March. Do you think there is a better way to express bullishness beyond just that very narrow trade at the moment?
Absolutely. So I think, even within AI, there are three layers. One is infrastructure, which is what you talked about, the chips and servers and networking. The second is models, which I think will be commoditized by the end of this. And the third is applications, right? In applications, you have the agentic applications, which is software, and the embodied applications, which is physical AI. Now, physical AI has its own ecosystem because robotics, humanoids are coming. Talk about defense and modern warfare is all about human without being in the loop. What does that mean? We've looked at LiDAR companies, which are needed in the physical AI world. So we're exploring the ecosystem beyond the traditional AI plays into the next AI second derivatives. And of course, software also looks, it's like first software was eating the world, now AI is eating software. But I think you need to be discerning.
Do you think this is a world where hardware and software can perform well? Because at the moment it feels like one versus the other.
I think AI is a full cycle capital stack, right? As I said, it ranges right from the infrastructure, the picks and shovels traditionally, to applications.
So yeah,
so I think,
AI built that little, built this pretty good. Did a pretty good job on this.
But to kind of diversify across
it's movable.
Stack. And even look at, like
closable.
I said, the next era of
double click is a closable, right click is a move it, and it stays on top.
What's going on in terms of the conflict in Iran?
I think we can't ignore it. If you see the monthly numbers, there is demand destruction going on as well. About 3 million barrels of demand destruction has happened. There's data center rationing in Asia. Restaurants are getting closed in some pockets of Asia. So it's important to keep in mind what that means, because At some point, if this is going to impact growth, I think the markets are really poised for perfection. And even at the IMF meetings 10 days ago, the policymakers were extremely nervous. There is a big gap, JP Morgan called it cognitive dissonance, big gap between what they think is the extent of damage
Between will and what will be. She's a maniac, maniac, I know.
To ramp that up. So I am concerned about the spillover if this blockade lasts long.
You have an interesting perspective because what the policymakers are thinking versus what the C-suite is thinking is a really large gap. And you were also at the Berkshire Hathaway over the weekend, the meetings. What did you learn there? Where are they deploying capital? Are they concerned about this conflict?
Yeah, so Berkshire was, the meetings was not about what they've invested in, it's about what they've not invested in. They're sitting in, with a lot of cash.
Caution or replay isn't available for the current symbol.
By Warren, Greg is very high. They did mention there are several great narratives in the market, but very, very few mispricing.
Alright, so then go to products.
They think that it's discipline versus participation in these markets. So and even on AI, it was pretty pragmatic in the sense, yes, there's energy efficiency that'll come with it. Too early to replace human judgment. Very, very different from, I'd say.
How instructive do you find that weekend? Because if I take two charts, their cash pile up and to the right, and plot it against the equity market up and to the right, does it make sense to be in cash for this long, to have a cash pile that big?
I guess as Berkshire Hathaway you can, but as investors, we have given money to not hold cash. So you really have to be invested.
Well, what's the difference? Why would you want to give money to someone else just to hold T-bills? You wouldn't, right?
I wouldn't. I'm an investor, and I think that, as I said, there's an AI stack in the world. It's broad-based. There's an industrial stack in the world: defense, automation, electrification. There are great domestic economies, even in Europe, which is some countries are gas-intensive, like Germany, UK, but some have great renewables, like France and Spain. There's the emerging universe with terms of trade beneficiaries, because all of this is going to need commodities. Brazil has 5 million barrels of crude production. It exports 2.5. There's a lot of opportunity outside, both within and outside the US. And I guess that's what we're trying to do.
Jitanya, it's good to see you. As always, thank you. Jitanya Kandari there of Morgan Stanley Investment Management. Equity futures stable, negative about 0.1% on the S&P 500, with an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. The U.S. is denying claims from Iranian state media that an American warship was hit by missiles. Iran had claimed 2 missiles struck a U.S. vessel. U.S. CENTCOM posting on X that naval forces are supporting Project Freedom and enforcing the naval blockade on Iranian ports. A United Airlines flight striking a light post on the New Jersey Turnpike before landing safely at New York Liberty International. The FAA and NTSB are investigating the incident. None of the 221 passengers and 10 crew on board were injured.
Government debt to GDP.
Is in a critical but stable condition at a Florida hospital.
123%. Is there anyone that's okay? Saudi Arabia, right? Which they did produce all the pretty much all the oil.
Up next, we'll get you some morning calls. Plus, we'll touch base with Tom Kennedy of JP Morgan on the AI data center boom and the commercial real estate play in this country. From New York City this morning. Good morning.
Start making some money. Making some money. Yeah. Man. Wow.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Back up here for now.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech.
So I guess the news in the EV sector, Tesla got the permissions to go fully automated drive.
We're at the epicenter of a global
Autonomous.
realignment on a scale not seen for decades. At the intersection between
Brain's having a problem with that
economics
word.
and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
I don't know if that's going to make a difference or not. What? I don't know. What you want?
There is a lot working for the economy, but there are two things that the economy can't stand up in the face of, which is higher for longer oil or really higher for longer rates. If we continue down this path, we run the risk of a little bit of both. If we put the Fed in such a bind.
That was Ross Mayfield of Baird joining the
Hi.
program a little bit later, a little bit earlier.
How are you?
Equity futures right now in the S&P 500
How you
negative
doing?
by 1/10%, on the Nasdaq firmer by 10%. Muted price action
People
now
can
with
actually
2
see
hours
you.
ago. Anything but pretty volatile price action. There were some headlines crossing according to state media in Iran that a US ship was struck by missiles. Denial. About an hour later from US officials,
Hey.
but in between, equities down, crude
You're so
high.
soft and cuddly.
Moving crude still sticks just
You
about.
are.
Brent crude
You're so
was
soft
up by
and
about
cuddly.
5%, now up by
Oh
2.5,
my
close to 111 on Brent. WTI at 103, and with
Such a
that move
grumpy
pushing through
boy.
bonds, fixed income yields higher
So
by 4
grumpy
basis
on
points on a 2-year, 391,
So
and
grumpy
that
on
move has stuck this morning.
Why are you grumpy on
So CENTCOM is saying no U.S. Navy ships have been struck, and obviously you
Fly
would
out of my
see,
arms,
I think,
then.
pretty immediately
All right.
U.S. fighter
Jump back to
notable that the UAE
the grind.
ADNOC vessel that was trying to
Leave
move
you
to
with
the
this
Strait of
for a
Hormuz
few minutes.
was actually targeted by the IRGC, which is why you see the risk premium continue in the oil market. A lot of anxiety and just really uncertainty in what's going on in the Strait of Hormuz.
There is some real risk over there, but we're insulated by earnings. You've heard that so many times on this program. Mike Wilson, Morgan Stanley, publishing just moments ago. Resiliency this earnings season is broader than appreciated, with a median stock EPS growth rate of 16% and a beat rate of 6%, the strongest in some 4 years. That's why stocks are still at all-time highs. That's the price action. Let's get you some morning calls. First up, HSBC downgrading AMD to hold, citing limited upside potential, expecting server upside to be capped throughout this year. Your second call from Oppenheimer, upgrading Airbnb to outperform, saying the company is well positioned to absorb travel dislocations from oil supply shocks while benefiting from World Cup demand. And finally, Baird downgrading Alexandria Real Estate to neutral, saying operating backdrop remains challenging. That name is down by 0.7%. Let's stick with real estate. As AI spending skyrockets, the race to secure power and space for data centers is creating opportunities in the commercial landscape. Tom Kennedy of JP Morgan writing, power is the new diversifier. We've moved from a US economy fueled by the checkout line to one fueled by the grid. Tom joins us now for more. Tom, good morning.
Good morning.
Good to see you. You alluded to it. I want you to build this out. The commercial real estate needs of the last 20 years.
Yep.
And what you think the needs will be for the next 20 years.
Yeah, I think it's a great place to draw the line in the sand is when China joins the WTO in 2001 and the era of globalization is upon us. We built out a logistics network where we could get goods, John, to your house here in New York City in 1 hour, and it took 20 years to get there. That has been the driver of the commercial real estate boom and industrial sector. But now with rising geopolitics, with COVID, we now need to onshore and reshore certain assets and certain businesses that they all need high power. We talk a lot about a data center needs a lot of power, but the applications for AI and these onshore businesses also need a lot of power.
So we've got the wrong mix right now. How's the build out going at the moment?
Very slowly. For the last 20 years, over that era of globalization, America built about 5 billion square feet of logistics and warehouse. Again, to get those goods to you really fast. We only built about 300 million square feet of manufacturing space. But over the last 4 years, Annual increases in demand for manufacturing space up 50%. Really haven't seen that in 20 plus years. So the supply and demand imbalance is quite big.
If it's going slow, what can be the accelerant in this?
Well, it's going slow to build a manufacturing operating center just takes a long time. So there's a time constraint, Emery, is one part of it. The other is we have to be able to build these high-powered manufacturing buildings in only certain places. America's grid is not set up as one big, beautiful grid. It's set up as 3 very distinct grids, and power is not easily transmitted across them.
It could be.
It could be. It needs some advancement and technological advancement.
Also, cutting of red tape. Are you seeing more of that from this administration?
Well, the grids are a little bit different. The grids are the energy grids that don't talk to each other. There's one in the east, one in the west, and then Texas. And to be able to have them talk is a networking problem that isn't necessarily red tape, some of that. But within certain states, you are seeing accelerants to, say, onshoring and reshoring into those areas. New York is one of them. Texas is another one. So there is some element of this red tape, but across state lines and the grid, that's a harder one to fix.
Just curious, where does office space fit into all of this?
So far, in the last 12 months, office is the best performing commercial real estate sector. It usually shocks people. How could that be?
It does sound shocking, so how could it be?
Well, a couple of things are happening. The return to office thing is real. JP Morgan is emblematic of that. We are in the office 5 days a week.
So is Bloomberg.
So is Bloomberg. There we go. But there are other companies following trend there, and we're just not building new office buildings. It takes 4 or 5 years to build an office building. And right now in the pipeline is a small amount of new supply coming in the next 5 years. The majority of it is already pre-leased. So supply picture is restrained, but we're coming back to the office. Maybe not every day of the week, but on Wednesdays, for the most part, we're coming back.
And this is what people worry about, though. You get this demand boom, and then people start building.
That's right.
Then you get the supply bust further down the line. And it's the worry. And this applies to a whole range of things beyond commercial real estate. This applies to, say, chips, manufacturing, all kind of things. Is it too soon to worry?
It's incredibly too soon.
Are we talking like decades? Because the way people talk about this is that the timeline is so long. Don't even worry about it.
A really simple way that I think about this question of will there be a supply boom in commercial real estate? Well, to build a building right now is about 25% more expensive than the value of the building that you're looking at, on average, across commercial real estate. So you could look at that a couple ways. Why would anyone build until this gap closes? Or I can buy this existing property and put at least 25% of upgrades in it before it becomes someone want to build next to me. So we should not be worried about supply boom right now in commercial real estate. The only meaningful investment in new supply coming is in this high-powered industrial space.
The next question is how this fits into our portfolio. So let's start with exposure, and then we can get to the diversification stuff that I want to spend some time on. How do you take exposure to these kind of things? What are you advocating for at the moment?
So in the alternative space or in private markets, commercial real estate is the biggest sector. So as you look at a portfolio, a lot of people have exposure to this. It's a relatively mature private investment. But as you start to broaden out now, we are in a new era of diversification, coming back to where we started. The era of globalization caused bonds to be a great diversifier. In an academic sense, why? Well, inflation was very low. So if growth came down, the Fed could just cut rates. But if growth came up, they didn't necessarily hike rates. Now we're fighting inflation from the top side. So new diversifier. Nominally resetting diversifiers, commercial real estate, infrastructure, to some degree hedge funds. I think that's the place to be.
Can I take you into a different asset class? Just bonds, just pure vanilla fixed income. If the diversifier is different and things have changed, and I knew why I was buying that for the last 20 years because it gave me certain benefits, introduced certain characteristics into my portfolio in very simple terms, and it's not doing that anymore, are people going to buy less fixed income?
To some degree, by definition, they should. If I was buying bonds in the globalization era for yield and diversification, I think now you're mostly buying it for the yield, and yet yields are higher. So I think there's offsetting characteristics there. I think if someone in their portfolio is now saying, I need to own bonds, it better be for the income. That's the predominant benefit it's offering to you in your portfolio.
Where does that lead state finances? And how are you thinking about those things?
I think it leads to a place where there's probably higher term premium than we've been used to. In most of our professional careers here, term premium, this concept of can I get a yield lower than what I expect the yield of the bond to give me over the life, like relative to a risk-free rate, as negative, we shouldn't expect that anymore. And academic models are showing you term premium is coming up. If this environment persists for a long time, I think it should continue to rise. And it does challenge the ability to finance more risky types of bonds.
That's what I wanted to get into just a little bit more. The future portfolio, just how different things are going to be in the next 10, 15 years.
I think the two dominant things that will be different, one is this concept of term premium, which should separate winners and losers in the bond market, which we really haven't seen materially in the last maybe 10 years, ex-COVID. And the other is this movement from public markets to private markets. It's much more efficient for a bank to allow someone else to give a private credit loan. So the notion that this market is just happening haphazard is not true. It's more of a structural regulatory shift. Those are the two dominant shifts.
Do you think it's unfair that let's just say the PR, the way people talk about private markets, has been reduced to just BDCs and redemptions?
Yeah.
Has that bugged you when you go around talking about some of these issues?
A bug is a little bit more aggressive than I would say. I think it's just a misunderstanding of how the environment has shifted. And again, a big bank's ability and willingness to give a small whole loan to a small business, it's just not a good use of their capital. They can do other things with it. So it's created this environment for alternative managers to step in and do that in a more efficient way. Ex-central banker in me. Well,
Sure.
a bank is 8 to 12 times levered. A private credit business is 1 to 2 times levered. It is less risk, assuming there's good backstops and ability for those asset managers.
Tom, thoughtful stuff. Lots to consider. Thanks for being here. Appreciate it. Thank you, sir. Tom Kennedy there of JP Morgan Asset Management. If you are just joining us, equities recovering here, almost unchanged on the S&P 500. More headlines just moments ago.
Right, we have a tweet from Central Command saying that basically the U.S. Navy guided missile destroyers are currently operating in the Arabian Gulf after transiting the Strait of Hormuz in support of Project Freedom. American forces are actively assisting efforts to restore transit for commercial shipping. This is the key. As a first step, 2 U.S.-flagged merchant vessels have successfully transited through the Strait of Hormuz and are safely headed on their journey. We really have not seen that, and that would show that this guided effort when it comes to Project Freedom is working. On the one hand, though, Jonathan, we also got an update from ADNOC talking about this vessel that was targeted by 2 Iranian drones. So potentially there's good news in Project Freedom, but also the IRGC is still going after certain ships.
Things are still fragile. Crude still elevated off the highs, though. 103 now on WTI. Brent crude just north of 110, 110.60, and up by 2% on the session. We've talked lots about that move in the bond market. Off session highs for 2-year yields, 10s as well, and 30s. 2s now at, let's say, 391. 10s at just short of 440. Up next, we'll catch up with Yelena Chudetseva of the Conference Board as rising gas prices weigh on consumer confidence. Plus, your hires back with your morning movers. eBay surging on interest from GameStop. That stock is up by 7%.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
The opening bell about 60 minutes away. Equity futures on the S&P negative by, let's call it 1/10 of 1%. No drama here. We closed on Friday, all-time highs. On the Nasdaq this morning, adding a little bit of weight to that rally, up by 0.1%. As we count you down to the cash open, 1 hour away. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We have some earnings to get through. We start with Tyson. Those shares are up 1.3% in the pre-market after the company boosted its full-year outlook thanks to strong demand for its protein, especially chicken. That helping to offset weakness in its beef business, an area that's still losing money as tight cattle supplies keep costs elevated there. Turning to another earnings story, Norwegian Cruise Line Holdings shares are falling 6.4% in the pre-market after it cut its full-year guidance, guiding to its first annual profit drop since the pandemic. The company performing the worst among its cruise line peers thanks to higher fuel costs, of course, but Norwegian also saying that they are seeing consumers pull back on travel, especially to Europe. And we end on our big corporate story. eBay shares soaring 7.5% in the pre-market as GameStop offers to buy the company for $56 billion. It's an audacious bet, with eBay about 4 times the size of GameStop, but that company trying to perform a turnaround. John?
Yahira, thank you. Thanks for the update. Appreciate it this morning. Let's turn back to the economy. A busy week of data coming up with loads of Fed speak, and the headline on Friday, the headline data point is Payrolls Friday. Bloomberg's Mike McKee has more for us. Good morning, Mike.
Good morning, John. Well, let me start with what's not going to happen this week. The Senate's out of session, so Kevin Warsh is not going to be confirmed this week. Look for that maybe next week. Also, the Supreme Court is not issuing orders this week as far as we know, and so no Lisa Cook decision is coming. But beyond that, as you mentioned, a lot going on. Tuesday, ISM Services will be looking at the jobs component, and we'll be looking at the prices paid component. On Wednesday, ADP jobs, same story about the labor market. Is the labor market hanging in there? We'll get productivity on Thursday. Everybody be looking for some evidence of AI in it. Probably too early for that. But then, of course, Friday is the big day with the April jobs report, and we'll see if the unemployment rate stays unchanged. The forecast 4.3%. If that's the case, the Fed feels better about not having to cut. The employment mandate test is Friday, as I mentioned, and it's not just 4.3%, but do we still see companies hiring at all? The forecast is for about half of what we got last month, and private payrolls making up more than half of that. Average hourly earnings would tick up to 3.8%. The K-shaped economy is always a concern these days. And as you mentioned, a lot of Fed speak this week. The highlight probably comes at the beginning and the end of the week. John Williams, vice chair of the Open Market Committee, the New York Fed president, is speaking today. Tomorrow we get 2 governors speaking. And then Friday, Chris Waller, who was one of the first Fed governors to say we should cut rates back when they began their cycle, who is now suggesting that maybe it's not time to. So we'll see if he has any update there. So a lot to watch for this week, and we'll be on top of all of it.
He's the one to watch without a doubt, Waller, on Friday. Mike, just to dissect some of the dissents that we saw and the explanations for them, Neil Kashkari's was somewhat interesting. He's making the argument for a tightening of financial conditions ahead of time, just in case they have to hike interest rates, because the job would otherwise be much bigger, Mike. What did you make of that argument?
Well, it's an interesting argument because, as you heard Bill Dudley say earlier on your show, that he doesn't think that the monetary conditions are very tight right now. So if you wanted to move the markets, you could change your bias to a neutral bias, could go up, could go down, which would signal the loosening cycle is over and probably send yields up some.
Mike McKee with the latest. Mike, looking forward to your coverage. Payrolls on Friday and lots in between. Let's turn to the consumer. Yelena Shuretseva of the Conference Board warning rising gas prices are weighing on confidence. She writes the following: inflation is starting to broaden beyond energy and should widen further through peak driving season, adding more drag on consumption. Yelena joins us now for more. Yelena, good morning.
Good morning.
That's where I wanted to start, the relationship between confidence and consumption. How tight is the relationship right now?
I think it's actually tighter than we usually talk about.
Tell us more.
I think at least directionally you see consumer spending is slowing, and consumer confidence, at least as measured by the Conference Board, is starting to stabilize. So remember, they were so different, right? So consumer confidence was plunging and consumer spending was so strong. I think now we see some convergence going.
Can you explain that convergence, particularly from consumer confidence up? What's happening there?
I think consumers are just, look at the economy, see what is going on. It's not really, falling off a cliff. And they do see the news. They see the unemployment rate is steady. Those who want to work are still working. So, they're happy about it.
This is the difference, I think, in survey construction. When we talk about UMETS, so much of that seems to be pinned on what's the price of gas. Gasoline's above $4 a gallon. Is yours much more focused on the labour market? And do people feel better about their prospects in this jobs market?
I don't think they really feel better. There's still a lot of difficulty finding jobs. But I think it seems to be stabilizing at least. So another thing that we ask about is financial conditions, like financial conditions for your family, not economy overall. And financial situation is not as great, and consumers are worried about it. So this is, I think, is one of the reasons we see that consumer spending is slowing.
Well, we have north of $4 a gallon of gasoline. The highest ever was under the Biden administration. It was June of 2022, north of $5 a gallon. Are you seeing similar responses to what we saw that June?
In terms of consumer confidence, I think that we see it in other different measures beyond the headline index. So there's a lot of pessimism in the write-in responses. So we're not only measuring the index itself and the subcomponents, but also asking consumers to tell us in their own words what is going on. There's a lot of concern. And there's an increase in the mentions of gasoline, higher inflation, and things like that.
At the same time, so many Americans got bigger tax refunds. Is that helping them in terms of cushioning their pocketbooks?
Maybe just temporarily and partially. I think the bigger result is going to be that it's going to last, and I think it's probably going to last longer than we think. And if oil is at an average of $100 per barrel, as it is right now for Q2, I think that shaves off 0.4 percentage points from GDP growth. This is according to our estimates.
I know it's really hard to speculate, but do you think gasoline goes through $5 a gallon as we approach peak driving season?
Peak driving season, that's exactly.
Are consumers preparing for that mentally?
I think they're worried about it, but until that happens, consumers will probably continue to spend. So there's this tension between what we expect and what is actually happening right now.
Can we finish on AI and the labour market? I'd love your thoughts on this. Note of the weekend came from Torsten Slog of Apollo. A much better outlook for the jobs market. He wrote this: nearly 2 million workers in the Philippines now work in call centres, up every year since 2016 and through the AI boom. He says as AI makes call centre work cheaper and faster, companies are buying more of it, not less. Lower cost per interaction does not mean fewer interactions. It means more customers served, more channels opened, and more markets worth reaching. I thought that was really promising because many people are concerned that AI is going to destroy certain parts of the jobs market. How constructive are you?
Well, I am pretty constructive actually on AI. So that seems to be the engine driving, labor market growth. So companies looking beyond the temporary disruption in the Strait. So I was visiting members in a couple of weeks, and I was like talking to CFOs, and they are like, well, we have to look beyond uncertainty. We cannot just stop investing. And that's what they're doing. They're looking beyond that temporary disruption, no matter how big it is, and they're investing and they're
Things
hiring.
picking up at entry level as well for the younger workers too. I've seen some charts recently that seem a little bit more promising than certainly what I'd feared.
I really hope so. I really need to see more of that. Still, things are much worse for the younger generation than it is for overall labor force.
Let's hope things change. Yelena, it's good to see you.
Good to
Thanks
see
for
you.
being here. Yelena Shurtseva there of the Conference Board on the outlook for the labour market. I thought the note from Torsten was great. One of the most exposed industries for hiring, AI, the call centres, you'd think things would be cratering, that apparently the things that tech is supposed to be hurting right now, it's fueling expansion, at least for that.
Yeah, that's what he says. The technology is supposed to shrink the industry, is fueling its expansion, but those 2 million workers were hired in the Philippines. What does that mean for America, an American's workforce? Does this mean AI, you're able to put those jobs elsewhere and at a cheaper rate outside of the United States? This is going to be a massive political problem, not just for this midterm election, but for 2028.
Let's get you up to speed on the price action. Stocks right now in the S&P 500 negative by 0.1% on the S&P. In the bond market, yields higher by some 3 basis points on twos at 3.91, and crude still somewhat elevated. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Vonnie has more. Hey, Vonnie.
Hey, John, thank you. Spirit Airlines shutting down after failing to secure a $500 million bailout from the Trump administration. The company posting a statement early Saturday morning saying, quote, all Spirit flights have been cancelled and guests should not go to the airport. A blockbuster opening for The Devil Wears Prada 2. The Walt Disney, movie starring Meryl Streep and Anne Hathaway, making $233 million worldwide. That makes it one of the year's largest opening weekends. In sports, a trio of Game 7s over the weekend in the NBA. The Cleveland Cavaliers eliminating the Toronto Raptors and the top-seeded Detroit Pistons defeating the Orlando Magic. Also, the Philadelphia 76ers coming back from a 3-1 deficit to upset the Boston Celtics. They will take on the New York Knicks with Game 1 tipping off this evening. And that is your Bloomberg Brief. John.
Very cool, Vonnie. Thanks for the update. Thank you. Up next on the programme, setting you up for the day ahead. Plus, we'll catch up with Kelly Kowalski of MassMutual with the rally stalling ahead of the opening bell. Equity futures just about unchanged.
Wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like
very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
The market is no longer asymmetric like it was as we were advocating in March and April. You've still got a little bit of upside, but at the same time, we have to work off the assumption there is back to a negative decay for risk assets, i.e. the longer this goes on within the Straits of Hormuz, the more problems we're now going to face. A lot of the buffer that we had in place going into this debacle is now going to get eroded.
The price of the story has changed. That was Alex Altman of Barclays following a double-digit rally off the lows at the end of March and gains of 40-50% on certain semis. The chip index absolutely ripping since the end of March and the March low. Equities this morning stalling somewhat. Equity futures negative by 1/10 of 1% on the S&P after closing at all-time highs in Friday's session. Similar story on the Nasdaq. We're positive by about 1/10, just about unchanged really across the board here. In the bond market, things get a little bit more interesting. At least they were more interesting earlier in the session. Yields were more elevated than this, but still through 390 on twos at around 440 on tens as crude picks up steam. 110 on Brent. WTI still in triple digits. Thursday, Friday, big two-day drop of about 8%, but this morning we pick up again by, let's call it 0.75% on WTI. Things are still tense in the Middle East.
Very fragile, very tense at the moment, especially this morning with a number of headlines whipsawing, Fars saying that Iranians hit a U.S. warship. CENTCOM said no. Here is one positive note, though, coming out of CENTCOM, saying 2 U.S.-flagged merchant vessels has successfully transited through the Strait of Hormuz. That's incredibly positive, given the fact that the president said they were going to guide, not escort, guide vessels out of the Strait.
There's a big difference between guide and escort, that's for sure. As we count you down to the cash open, let's talk about the week ahead. Last week was all about the earnings. This week is all about the data. At 10 a.m. Eastern Time, we get durable goods. Tomorrow, PMI data and results from AMD. On Wednesday, Disney reports. Plus, I believe through the week we get ADP and jobless claims. Jobless claims, of course, drop on Thursday. On Friday, it's the payrolls report. Stocks at the moment very close to all-time highs following a series of headlines from Iran. The whipsawed equity futures earlier on this morning. Kelly Kowalski of MassMutual writing the following: even with this uncertainty, it's difficult to turn pessimistic in the near term amid stellar earnings momentum. Kelly joins us now for more. Kelly, welcome back to the program. How impressive has that earnings story been?
Well, Jonathan, thanks for having me. Good morning. I think coming into this earnings season, the bar was relatively low, but we've just blown it out. And granted, a lot of that has come from the AI CapEx story. And we've seen second quarter earnings expectations inch up as well as, year-end 2026. So I think it's not hard to really look at the results we've seen and be that surprised that the markets continue to rally, even amid, long-dated crude futures continuing to inch up.
Kelly, we saw throughout the year people itching to rotate away from big tech, itching to rotate into other markets, international markets, whether it be Europe or Asia, some big performance in places like South Korea and Japan. And now it just feels like the central US tech trade is back and it's drawing more and more people in once again. What do you suggest they do about concentrated risk? Is that a feature or a bug?
I think it can be both for investors. So, we look at the equity markets as well as the bond markets where you are seeing growing concentration, and it really means continuing to pick your spots and have a little bit more patience. We've seen a huge flow of capex related issuance in our IG credit space, and it's caused us to be just a little bit more patient there. I think it's hard to fade it too much in equity markets because you have such a supply demand mismatch. When you have these hyperscalers with over $1 trillion in backlogs, it's hard to be too negative there with that disconnect between supply and demand.
Kelly, in your report, in your notes, you talk about how earnings are underscoring several encouraging signals. There's still this resilience, especially in the upper echelons of society, to continue spending. And you say, what war? Is this market just basically in a position to shrug off what is going on in the Middle East?
I think for now you have all of these tailwinds, right? You have the capex bill, you have the buffer from the fiscal side. The average consumer is getting $3,500 to $3,700 in tax refunds. So that's all good and well for now, but I think as we get into the remainder of the year, this war may start to matter more as you see the commodity inflation feed through, the food inflation feed through, and eventually that leaks into services on top of maybe the services inflation we already have right now. So for now, we're seeing a lot of positive tailwinds, but we are prepared for that to face some challenges as you think about some uncomfortable inflation prints we may see and the upward pressure in bond yields.
Well, what does that mean, this higher potential inflation prints? This administration was talking about a war that could last 4 to 6 weeks. Now we're entering the 10-week. Is there a line in the sand where you have to start to rethink some of the impact?
I think there is, and there's obviously midterm elections coming up, but November is a long way away. But there is only so much that can be controlled when you think about the negotiations and the strategy now. Is even if this does get concluded in short order, how do things come back online? And given the impact to fertilizer shipments, how is that going to impact the crops that were planted? There's still a lot in motion, I think, that has happened that we still have to see the impacts of, regardless of if this concludes in 2 weeks or in another 4 to 6 weeks.
Kelly, many investors stopped caring about this issue on this side of the Atlantic, in New York, in the United States, and have stopped caring for quite a while now. What do you think that moment looks like when they start to care? If there is that moment, what do you think it will look like?
Look, I think the consumer is, hoping that this gets resolved, and I think the market is pricing for the same. But you're probably going to see a slowdown in the consumer. I mean, I think you've already seen it with, Bank of America reporting that travel slowed down in April. You saw some earnings reports from Domino's Pizza, from Wingstop, that it was mattering for the consumer. But you probably would see it get a little bit more broad-based. I don't think sentiment can get any lower than it is right now if you kind of look at some of the readings. But as you sort of get into the second half of the year, do we expect the consumer to collapse? Probably not, because you've still got that high-end consumer still spending. But they're going to be muddling through a little bit more, and it is going to get, probably more dire for certain people.
Kelly, appreciate the update. Thank you. Kelly Kowalski there of MassMutual on this market, going into the opening bell about 39 minutes away. Eyes on crude. Right now, Brent still rising, but off this morning's highs. The US is denying claims from Iranian state media earlier on this morning that an American warship was hit by missiles. For an update, I want to cross over to Tyler Kendall down in Washington, D.C. Tyler, what is the latest this morning?
Hey, John, well, you mentioned it there. We got this confirmation from CENTCOM that no American Navy ships have been hit after Iranian state media had reported that there were some strikes. CENTCOM also went on to confirm that so far 2 U.S.-flagged merchant vessels have transited through the Strait of Hormuz. This comes on the heels of President Trump announcing what is being called Operation Freedom to help move vessels through that the president says are neutral. But many shippers have been left without many details, but perhaps this could be a good indication that those efforts are working. In fact, we did get some headlines out of some shippers earlier today saying that they are taking President Trump's efforts into account when they are reviewing their security protocols. Also, though, at the same time, the situation really does remain highly, highly fragile. John, as you well know, earlier today, Iranian state media said that the government had, quote, redefined the control zone in the Strait of Hormuz, appearing to say that they are putting out new maps where they are going to keep their own control.
And while they say that, the United States and the Joint Maritime Information Center saying they have an enhanced security area that they are establishing when it comes to the Strait of Hormuz. Tyler, when we heard from the president, he also talked about positive talks underway between Iran and the United States. Where does the diplomatic off-ramp stand today?
Well, Amory, as you well know, this White House maintains that diplomacy is still going to be a viable option. Iranian state media did report yesterday that Iran was reviewing a U.S. response to its proposal that it had put on the table last week that could see a reopening of the Strait of Hormuz if the U.S. lifts its naval blockade. But importantly, that plan had laid out that Iran wanted to postpone dialogue when it came to its nuclear program, something this White House says is a non-starter. Now, President Trump importantly did say that talks were making progress, but he also didn't rule out the potential that we could see further U.S. military strikes, amid reporting that it's something President Trump is seriously considering in a bid to try to get through the gridlock of the negotiations. But Amory, at this point, the administration is saying that they are going with the economic pressure instead of resuming that military campaign. We have the U.S. Treasury Secretary Scott Bessent outlining that the U.S. thinks that Iran is coming close when it does come to its oil storage capacity. In fact, Bloomberg News had reported on Saturday that Iran has begun curbing oil production as its storage tanks fill up, but a senior Iranian official says that this is proactive, that they haven't reached that level yet, but they're trying to tweak their operations in a bid not to get to that full capacity.
Tyler, appreciate the update. As always, Tyler Kendall of Bloomberg down in the nation's capital in Washington, D.C. Looking at crude this morning, Brent at the front end of the futures curve, the front month right now, 110 for the month of July on Brent crude, and elevated across the curve. We're out into the 90s right up until December, where we trade this morning at 89.
Might be too high for this administration, especially when the Treasury Secretary is talking about once this conflict is over, maybe before the midterm elections, you can actually see lower gas prices than we are today. We're at $4.45 today. I think what is interesting, this morning we saw tons of whiplash. What I'm taking away from this is not just the president's words. We need to see the words actually put to action. And I think CENTCOM saying that 2 U.S. flagged merchant vessels successfully transited through the Strait of Hormuz is a huge step forward. But the issue, of course, is that ADNOC is coming out and saying that their vessel was targeted. So we might see this be a little bit messy when it comes to that guiding of vessels.
The market is no longer buying the hopium in quite the same way. And I'd say the key date for that was April 17th. When the administration came out and indicated the Strait of Hormuz was going to reopen, you had this big rally in risk, this big drop-off in crude, and then that weekend it didn't open. From then it was a show-me market. And you need to show me a lot more than what we've seen so far.
It's not just words. They want to see action. And that is why it's incredibly important to understand what CENTCOM is actually able to do in terms of guiding vessels through the Strait.
Coming up tomorrow, Jeff Yu of BNY will catch up with Jane Foley of Rabobank, Gil Luria of D.A. Davidson, and Jordan Jackson of J.P. Morgan from New York City this morning. Good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, you know, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, you know, these things can go on for a long time, but ultimately, you know, there are adjustments, there will be drawdowns, there'll be rebalancing, and just it's hard to call it because the trend, the technology trend and the investment is real.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitvale had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Kicking off the week after a string of record highs, 30 minutes until the start of cash trading. I'm Matt Miller. Danny Berger is at the Milken Institute Global Conference in Beverly Hills. You'll see her later this hour. Bloomberg Open Interest starts right now. Coming up, stocks, a little change right now, but oil spiking as the latest headlines show Middle East tensions are far from over. Meanwhile, GameStop makes a bold play to take over eBay, a company 4 times its size. And as I said, Danny Berger is out at the Milken Institute conference on the West Coast. She sits down with some of the biggest power players in the business and in the worlds of business and finance at that conference. We'll bring you those conversations live. In terms of stocks to watch right now, I'm looking at, can't look away from GameStop. It has less than $10 billion in cash, and yet it's made a $56 billion offer to buy eBay and expand its online presence. Right now, you know, GameStop's revenue picture is shrinking because who buys physical video games? You can see eBay stock is up just about 6.25% right now. But back to our top story, Brent crude is back above $110 a barrel after Iranian media claimed a strike on a U.S. warship. The U.S. then denied that any of its warships had been hit, and it now says it helped 2 U.S.-flagged merchant ships cross through the strait as part of President Trump's Operation Freedom. Joining us now to talk about this is Wayne Sanders, Bloomberg Intelligence senior defense analyst. After 26 years in the Army, he was chief of staff to the Undersecretary of Defense for Research and Engineering. And Colonel, what do we know about Operation Freedom? What do we know about President Trump's effort to guide ships through the Strait of Hormuz?
Yeah, thanks, Matt. I think that right now, when you look at the way that it's set up, is the blockade still in place with the ability to provide coordination and escort through the channel, right? Especially the areas where it's really bulked down into about that 2 mile area for shipping. And so, as you mentioned, USCENTCOM came in and said, "Hey, look, we were not actually struck." They said that one of the frigates were struck. That is not true. And then they followed up with being able to provide 2 U.S.-flagged vessels through the strait at this point in time, and they are now headed safely home. So we put that out there saying, hey, this is actually a really good opportunity for the U.S. Navy to be able to show that they can provide some of that level of support, even with Iran potentially eyeing some type of escalation event.
What could we do militarily, Colonel, in order to ensure safe passage through the Strait of Hormuz for good? I mean, considering the fact that we've knocked out Iran's military capabilities for the most part. President Trump and Secretary Hegseth often repeat how well we've done in the war. Why can't we ensure a safe passage through that strait?
Yeah, it's always going to come back to an asymmetric threat that Iran has. When you look at the Iranian Revolutionary Guard Corps and their fast boat capability, right? These are small boats that don't require a lot more than a 50 caliber machine gun that's on the back of it to be able to interdict traffic for these vessels. So the military they can do what they can do at that point in time to be able to say, I can put intelligence, surveillance, and reconnaissance assets in the air over top of these vessels as they transit. And then it becomes a quick reaction capability to be able to hit those vessels and strike them prior to them being able to strike these vessels as they traverse. But it's still an asymmetric threat. These are very small, they are quick, adaptable, and all you need to do is have the threat of violence as well as maybe one or two that are actually struck or boarded, and you've created the same level of lock that you've seen over the last few weeks.
But along this most important part, right? What is it, a 25-mile stretch? Can't we just, keep armed forces on the beach for that portion and stop any of that asymmetric warfare from getting off the ground?
You could, and I think that's one of the military options that are out there, but it is obviously a very strategic risk. You put boots on the ground inside along the coastline. First off, some of these are very civilian-heavy ports with not a lot of IRGC presence originally until you put them there. The problem that you run into then is you now have a standard stationary target for Iran to go after. They're not going to like U.S. boots on the ground, so the risk obviously is very high if they do that, because at this point in time, all that effort would end up being directly at these U.S. troops. And all it's going to take in the eyes of the world is if they're able to successfully hit a platoon of Marines or to hit a battalion of the 82nd Airborne that would be on the ground at that point in time, that would be a geopolitical strategic victory for Iran.
All right, excellent intel as usual. Thanks so much for your time. Retired Army Colonel Wayne Sanders, now working for Bloomberg Intelligence. Let's turn back to the stock story of the day. GameStop has proposed a $56 billion takeover of eBay. That's 5 times the market cap of GameStop itself. It's an acquisition that Ryan Cohen described in the Wall Street Journal as either ultimately genius or totally foolish. Caroline Hyde from Bloomberg Tech joins me here on set. So this is, they've got less than $10 billion in cash, right? They're going to borrow 20 and then issue shares for the remaining 26.
How very GameStop.
Yes.
How very 2021. How very Ryan Cohen. How very bold. Look, this is a guy who was known for Chewy, went in, took GameStop, and then through the roaring kitty days of 2021 and meme stock frenzy, now is looking to have the audacity to buy a company 4 times its size. eBay is having to take this seriously. Real money is moving on this. The shares are reacting. Truist has said, look, it's a stunning proposal, but they're skeptical. People are skeptical of really what the outcome of the business would look like, whether they could get the access to the $20 billion that's needed in financing. Look, Ryan Cohen has said, we're good for it. We've got a letter from TD, and they could maybe help us get that bridge and refinancing that would ultimately be reliant on the debt markets. You say they got like $9 billion in cash, but this is a company that does see synergies. They're both in collectibles. They're both in sort of an area of whether or not it could be helpful for eBay to have a little bit more bricks and mortar, because certainly it's very asset-light compared to rivals like Amazon. But Jamie Iannone, who's the CEO of eBay, has been turning this business around, has been getting the market capitalization back up, leaning into AI, doing M&A of his own like Depop, thinking about where meta partnerships can come in. It's been slow grind, but it's kind of been working. They had a good set of second quarter guidance. EPS was a little bit light, but the first quarter showed strength according to Bloomberg Intelligence. So really, is this what they need as a distraction right now? They said they've got the deal terms, but certainly they haven't started any conversation.
So it's kind of been working for eBay. It hasn't been working for GameStop, right? If you take a look at their top line growth, there is none. They continue to shrink in sales year after year, obviously, because this is a business that's in structural decline. The only thing they have here, it seems, is the faith of TD Securities and like the stock market.
Yeah, and the believers who have liked Ryan Cohen's audacity of the past, and actually he's gone as far as to bet on himself that he's getting a little Elon Musk in the whole vibes of promising himself some massive returns in terms of shares he'd have access to if he drives the market capitalization of GameStop to $100 billion. How is he going to do that other than with some whopping M&A? And then he has to hit certain targets to be able to access an enormous amount on the 170 million worth of shares of the company. But yeah, you're right. This is a question as to whether this would be helpful for GameStop, whether it would be better to get into the C2C market a little bit more, whether the collectibles is an area they can lean in, whether they can actually structure this. But I mean, it's thoughts and prayers and hopes at the moment. And Bloomberg Intelligence just saying they just don't see a reliable way of this deal getting done.
Caroline Hyde will be anchoring Bloomberg Tech at 11 a.m. And if that fails, maybe you and I can convince TD to give us $20 billion and we'll buy eBay.
Have you not got a letter from them yet?
No. Berkshire Hathaway's cash pile jumped to $397 billion the first quarter as it's offloaded some stock holdings during Greg Abel's first 3 months as CEO. They could buy eBay, 6 times. Bloomberg's Alex Rajbandari covers Berkshire for us and joins me here on set. So this is a company that really needs an acquisition and wouldn't have to borrow anything to do it.
Indeed, it's never been that high. And, one of the main questions coming into the weekend in Omaha in the past few days was what Abel would say about his investment perspective. Because, until this year, he hasn't really professionally managed any money. It was all Buffett's remit and also Ted and Todd. Investors were kind of happy because he kind of talked about it. He said, look, we know there are companies out there that have great management, great operations, but the valuations are not there. We're not ready to buy them right now because it's too expensive.
What about his own stock? I mean, that seems, by some accounts, overvalued as well.
So they've been buying stocks for the first time in over a year in the past quarter, which is good news for investors. The rule at Berkshire is that Warren Buffett decides when the stock is above its intrinsic value and then decides to do some stock repurchases. So over the past year, it was over that. It's been a bit lower. We've written a story last week about the stock being a bit underperforming the S&P 500 over the past year since Buffett announced his retirement. So there was an opportunity there to give some payout to shareholders. We'll see where this goes in the future.
All right, Alex, we'll continue to count on you for coverage of Berkshire Hathaway. Alex Rajbandari in charge of that company for us. Check on markets right now. Just 20 minutes away from the starting bell after hitting an all-new closing high on the S&P 500. Right now, little changed. I guess a red arrow there, down 0.1% on the S&P, and up a little bit less than 0.1% on the NASDAQ in terms of futures. In terms of the 10-year yield, right now it's at 4.39, and we did see the 30-year yield almost hitting 5%. So price down, yield up is what we're seeing across treasuries. Brent crude continues to gain, although now holding at 110.11. It had been up well through that level earlier this morning. Coming up, Citi's Stuart Kaiser on whether earnings can continue to overshadow, earnings and AI, I should say, continue to overshadow the Iran war risks. This is Bloomberg Open Interest.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's get to high interest, to look what's making headlines around the world outside of Formula One, which was pretty awesome. Spirit Aviation is winding down operations due to surging fuel prices and a failed government bailout. All Spirit flights have been canceled, and passengers have been advised not to go to the airport after the airline failed to secure a deal with the Trump administration for funding. The Wall Street Journal reporting that Anthropic is finalizing a $1.5 billion deal to create a new joint venture with a handful of Wall Street firms. Blackstone and Goldman Sachs are involved in the agreement, which aims to sell AI tools to private equity-backed companies. And Morgan Stanley says strong tech earnings are overshadowing fears that the Iran war could weigh on stocks. The team led by Mike Wilson pointing out in a note that the median S&P 500 company has posted an EPS upside surprise of 6%. That's the strongest in 4 years, and we are looking at double-digit earnings growth under that. So adding that hyperscalers and semiconductor companies have been major contributors to this durability. Wilson and team continue to be bullish. Let's ask Citi's head of U.S. equity trading strategy, Stuart Kaiser, about his thoughts. Obviously, earnings growth has been fantastic. We're always going to see beats, right? My entire career, that's 75% of companies have beat. But can we continue to outweigh concerns that, the inflation caused by the war in Iran is going to lead to more Spirit Airlines bankruptcies?
Look, I think that, the test for that's going to be the next couple of weeks, right? We're now through, call it 3/4 of S&P earnings. To your point, they've come in very strong. It's allowed us to kind of ignore the Iran war to some degree. Also, there's not bombs falling in the overnight, which, makes that easier. So, look, I think if you can keep oil kind of where it is here, then yes, the market could focus on earnings and move past this. If you get kind of an exponential rise in oil because of the blockade, then earnings are not going to be enough to balance out.
So, but you think if we keep, NYMEX at $100 a barrel and Brent at 110, that's not going to dent earnings expectations in Q3, Q4, and 27?
It ultimately will. I think it's going to be pretty hard to sustain oil prices at that level from the Trump administration perspective. But yeah, to your point, if you keep oil above $100, we're not quite there yet. If you go back to the Ukrainian invasion by Russia, you had TI above $100 for 87 out of 102 trading days. We've not had that level of kind of dislocation. And I think that's why earnings printed so well, because the high oil prices were not in place long enough to kind of impact the earnings outlook. So yeah, if we're talking in July and we're still at $100, then yeah, I would expect, especially consumer companies, to have to talk about, I think, that cumulative impact on their earnings performance.
We're looking, I just pulled up the daily national average from AAA. We're now looking at $4.45 a gallon, and that's the average, right? If you're in California, and I know it's your own fault, you're looking at $6 or $7 a gallon. At what point does the consumer, at what point are their tax refunds tapped out?
It's a great question. I think you saw the kind of warning shot last month from that, where you saw small business confidence and consumer sentiment decline substantially. And we get UMich on Friday after the payrolls report. So I think if you get a few months in a row here where sentiment is meaningfully depressed, then you do have to start worrying about what that consumer kind of spending outlook is. You know, tax returns are about 20% higher year on year. I can tell you that's a lot smaller gain than the bulls were hoping for. I think, folks were hoping for 30, 35% type increase in tax refunds. So yes, tax refunds were positive. I think they were less positive than consensus had hoped for. And if you're looking at that sentiment, particularly on the small business side, you do have to be worried if these high gas prices continue, what that means.
You had a very bullish basket of stocks that continued to see gains. I think it was Momentum, and what? Big tech?
It was kind of the overlap between growth stocks and momentum stocks.
Okay.
And those stocks are up 35% since the end of March.
So now you're backing out of that?
Yeah, they've sort of crested a little bit in our view. And now that you're past those large cap tech and growth earnings, we think kind of the catalyst for that has passed a little bit. So not necessarily negative on the space, but I think you kind of had that burst of rally off the lows, which has probably tired itself out a little bit. U.S. power generation, from a thematic perspective, probably our favorite trade. So kind of benefit from all of this AI CapEx spending is the way we'd be going after the market right now.
But I mean, has this been a melt up since March 30th? And I'm just putting it into my comp screen right now. We're up 14% on the S&P.
Yeah, it's been significant.
And every day we hit new highs. I mean, are you saying you're still bullish stocks, but we're not going to continue to see like these kind of gains that we've seen throughout April?
Yeah, I agree. I mean, once you get to the 7,200 level, call it, I mean, your risk reward is less attractive because you do still have those Middle East tail risks kind of hanging out in the background. You've revalued yourself. And we had kind of this nice PE re-rating in the U.S., and you could argue it happened in the most perfect way possible, which was sideways equities and the E rising. So you sort of grew into your valuation. That was very, very positive. I think from these valuation levels and now getting through earnings, the risk reward is less attractive. But if you asked me to pick a side, we're picking higher from here.
What do you buy with new money? If you get fresh cash coming in the door at Citi, where do you allocate it?
Yeah, again, we like, if you look at the AI trade lately, you've been punishing the spenders, you've been punishing the victims, which I would call software. Everything in the middle has been getting rewarded. So anything with a bottleneck, and that'd be your semiconductor stocks, your memory stocks, and particularly AI power generation. I mean, this country is just undersupplied power. And if you hear the anecdotal stories about how hard these data centers are struggling to find power, we think that's the number one way to have exposure on. Our power gen sort of basket or list of stocks is up 41% year to date. And we see kind of continued upside there. So if I had to put new money to work, it's going to be, if I'm at the index level, I'm just going to Qs. If you're looking thematically, it's this AI power generation story that we still think has, a tremendous amount of runway to it.
What do you watch? We were looking at the 30-year yield, right? Currently at 4.982, so near as damn it to 5%. The 10-year is still at under 440. What do you watch to make sure nothing breaks?
Yeah, it's a tough call. I mean, to me, the risk in the bond market is way at the long end. So the 30-year bond would be kind of what would worry me the most of those two. Particularly if you look at Japanese 30-year bonds, they've kind of got off the rails a little bit. I mean, the front end, look, last week you had two-year up about 10 basis points because the Fed spoke a little hawkish, but. From a tail risk perspective, I think it's the 30-year yield that you want to keep a closer eye on.
And the Fed, I mean, it seems like they're split between hikes or cuts, and we're just going to see, higher for longer.
Yeah, I mean, look, the Fed was, I think, on the margin a little bit negative because they sort of skewed a little hawkish and not for good reasons, right? I think they were skewing a little bit hawkish because they're worried about inflation risks. Growth under the surface, still fine.
Kashkari seems like he's even willing to sacrifice some jobs for inflation.
Yeah, unfortunately, I think that's the position Europe is in. You have a single mandate ECB, and they're totally focused on inflation. My view would be if you view this as temporary, that's probably the wrong way to approach it. But this is a Fed with still a little bit of lingering inflation credibility issues, so they're going to have to message it really strong that way. So, look, are we concerned about the Fed? I think we're concerned about the Fed the same way we're concerned about consumer spending, which is a month and a half from now, if we've still got oil above $100, then the cumulative impact of that on the inflation outlook, on potential recession risks, as well as on consumer spending become a real issue.
So we're getting jobs numbers at the end of the week. What do you expect? I think you're a little bit negative compared to consensus, right? And how does that affect your outlook?
Yeah, we are. I mean, Citi US Economics has a 15K job loss, so minus 15K, and the unemployment rate going to 4.4%. I think you'd have to say that that would read negative for U.S. equity markets. Consensus is at plus 62K and a 4.3%. So we're a little bit out of consensus. I think the Citi view you'd have to say is net negative for equities, right? You know, job loss and a rising unemployment rate. That data's been so volatile, it's a little hard to know how the market's going to react to it. But my sense would be the market will more aggressively punish a weak print than it will reward a strong print. I think there'll be some skepticism about a very strong print, given all the risks we've discussed.
All right. I mean, it's funny because at any other point in my life, if you told me 4.4% unemployment and 3.5% on Fed funds, I would think we're golden.
No, I agree. I agree.
Stu, pleasure having you here. Citi head of U.S. equity trading strategy, Stuart Kaiser, going to go over to Bloomberg Radio. But don't switch to them. Stay right here with us, because coming up on this program, Danny Berger joins from the Milken Conference with Apollo co-president John Zito. It's an interview you don't want to miss. This is Bloomberg Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
All right, let's get a look just 4 minutes away at the markets and some of the individual movers. Norwegian Cruise Lines cut its full-year profit outlook due to higher fuel prices and weak travel and demand. You can see those shares down 5 in the pre-market. Tyson raised its profit forecast as its chicken business jumped year over year. You can see those shares up 1.7% in the pre-market. And Long Lake Management, a startup backed by General Catalyst, will buy the American Express travel platform, Global Business Travel, for $6 billion. We're back in 2 minutes with the Open and the Milken Conference. This is Bloomberg.
by the Spirit Airlines, which is, it has ceased operations over the weekend. You know, they sought a Hail Mary from the government. They were seeking a bailout. The government and bondholders were not able to reach a deal. Among those bondholders, you had Citadel, which had, according to reports, submitted a counterproposal to the government. The government would have taken a massive stake, and they would have been at the front of the line with regard to getting paid back over others. It didn't seem like, according to reports, that Citadel was on board with that. So what ended up happening is the company did not receive a bailout. The parties on both sides couldn't reach a deal between the government and bondholders there. It's the end of an era of decades of operations for Spirit Airlines. Spirit, as we know it, began in the 1990s, but an early iteration of Spirit as charter airlines, 1980s there. It left thousands of customers stranded, as you know, Nicole, over the weekend trying to figure things out. Check-in counters empty, customer service gone, don't call us, we're not working right now, basically. It's not don't call us, we'll call you kind of a situation. People were finding out about this in real time, whether it was employees or customers. A lot of nostalgia over the weekend about this one because, you know, as we know, for some it was the airline people love to hate, but for some they loved the airline. Ocho Cinco, you know him. He's a big saver. He loves the Spirit Airlines. So it was, you know, it was kind of nice and nostalgic to see some of the nostalgic posts.
Oh, I love Spirit Airlines. They told you it comes to the Marine Air Terminal, and it's been around since the early 90s. And for some people, it's as long as they've been alive.
Yes.
Do you know what I mean? It's a way to save a lot of the college kids. My son's friends going to Memorial Day weekend. I mean, these are fun things.
Yes.
But there are people who had real tickets. Okay. Thank you, Diane. Stocks are rocking. Oh, yeah. I saw the Spirit Airlines fallout in real time on the weekend. I was in Michigan, and folks with Grand Rapids, Detroit, Chicago, trying to figure out to get other flights, where to return the cars. It took them a whole day where they should have been enjoying kids and their graduations, and instead they were, you know, 6 to 10 hours on the phones and spending more money. It was definitely a tough change for folks. Here are the numbers. We saw records for the S&P and NASDAQ on Friday at 5 weeks in a row of gains, but you're only 7 points down on the S&P, okay? Don't cry in your soup. The NASDAQ 100 up 1/10%. The Dow was down 178 points. The Dow finished lower on Friday. The small caps down 0.2%. This is gold is down $73. Oil's up about $1 here, close to 103. The 10-year bond yield at 4.41. So that has been creeping higher over the last few days. You know, Powell's staying on. Warsh is coming in. A lot to discuss. More names in the news as well. We bring in George Silas joining me here, taking a look at SanDisk, and you have a price target hike to talk about. Good morning, George.
Morning, Nicole. Yeah, I mean, looking at SanDisk, if you look at the earnings last week, sales were up 252%, and they increased their guidance for the full year. And so a lot of the analysts are still bullish. You know, prices have been very high, demand has been very high, and of course, supply for memory has been shallow. So these are companies, SanDisk, Western Digital, have done extremely well. Some of the analysts are still quite bullish. If you look at Bernstein, they actually increased their price target on SanDisk to $1,700 from $1,250, maintain an outperform rating, and that was based on the earnings that again grew 252% year over year. Estimates actually by the company were raised, and guidance was also increased as well for the full fiscal year. So the demand for memory is still strong. AI build out is still there in the memory as well as the storage space. And SanDisk has done phenomenally well, up over 3,000% since it was spun off from Western Digital last year. So it's been a great investment for those who have been in it. And some of the analysts are still quite bullish, like Bernstein.
Yeah, I see consumer discretionary is higher today. I just was looking to try and get a sense of where, you know, we might see some weakness, materials, consumer staples, utilities. We talked a lot, and I want to get to some of the other names. You mentioned AMD, but I was looking at GameStop down 5%, eBay up nearly 5% on that deal talk. Let's talk about AMD, a downgrade there.
Yeah, so this one will be interesting because we know AMD has been a phenomenal mover in the past month. I think it's up over 70 or so percent, and they do have earnings coming out on Wednesday. So going into the report, HSBC actually downgraded the stock in terms of their rating to a hold from buy, but they did increase their price target fractionally to 340 from 335. They actually see the estimates for Q1 essentially to be reported on Wednesday as constrained or limited, not because of server demand, but essentially they're looking at the foundry aspects of AMD's business, which may be constrained due to manufacturing constraints that they have from their suppliers. Intel increased their guidance, but they also have more control of their own manufacturing, so that's why that stock maybe has still ticked to the upside since the earnings report not too long ago. But AMD, again, interesting in the case that it's already up significantly, and they may be facing some supply issues, not necessarily demand issues associated with their CPUs, GPUs, as well as their server technologies.
All right. And last but not least, you had Greg Abel this weekend with the Berkshire meeting. A lot going on when it comes to the earnings. You just heard our guest, George C., likes the company as well. Some of your thoughts.
Well, a lot of folks have been waiting on some, aspects of what's going on with Berkshire because of the transition with Greg Abel. But they did report in their annual meeting that they had an 18% increase in operating earnings, about $11.3 billion. One of the things they pointed out was the share buybacks were quite modest, around $235 million worth of shares. Some analysts and maybe some major shareholders were looking at perhaps $2 to $3 billion as more in line with what the company should do. But nonetheless, the railroad division of Berkshire, as well as insurance, did demonstrate some significant gains. Those are two areas of the industry space that have been very fruitful over the past year or two. But the other thing is, if you look at the cash reserves for the business, it's actually increased almost $400 billion to $397 billion from $373 billion last year, because there's conservative aspects of the business waiting for better opportunities, with the shares actually down about 12% over the last 52 weeks.
Yeah, and you were talking a lot about those tech names. I saw Micron is at a 52-week high today as well. I thought I'd throw that in there. And you mentioned earnings, and I know Coinbase is going to be reporting earnings this weekend. Coinbase is having a good day. In fact, it's one of the leaders on the S&P 500. It's up 5.25%. Well off the highs, though. Nowhere near a 52-week high. Okay, George Still, it's great to see you on this Monday. Thank you so much. Coming up, folks, we're going to take a look at the AI trade. What's working? What's not working when it comes to AI? How's your portfolio? All right, let's have a discussion. Opening bell. We'll be right back.
Others recap the news. I help you read between the lines, from what's moving markets to what's next, with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall, and connect with me on LinkedIn for more.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitics.
I try to be much more of an optimist about it because it just, I don't think anybody really knows. I think we're going to create some amazing new businesses that no one knows about. I think the venture community, that what people can do, it took Palantir 17 years to get to $1 billion in sales. Companies like, my friends at Cognition, they get to $1 billion in sales in less than 3 years with less than 300 employees. I mean, the ability for the most dangerous people is a really smart group of folks that are actually sitting in a room with not that much. They can actually design amazing companies. So I'm extremely bullish. Growth and venture and people who can transform things. Fully optimizing things is different than transforming things.
How so?
And in that when you transform something, you're completely transitioning that business. Optimizing things was a much more nuanced thing. I'm going to cut costs by 20%. I'm going to raise sales by 10%. I'm going to do this thing a little bit more efficiently. You can now transform things with much less capital than you did before. And that I think's pretty exciting. So for anyone out there who's more of an entrepreneur, I think it's an incredible environment. And so I get excited about that, and I try not to get into the doomer stuff too much.
I still go back to this idea, though, that what happens if you're investing in the rest of the economy? What if you haven't changed your rubric to valuations that asset heavy is the place to go? Because there are plenty of firms out there and plenty of credit shops that don't want to venture into this AI data center spend. Is there a place for them, or is there sort of a crowding out where investment necessarily needs to go to this project?
Yeah, it's not all going to be, every sector is not going to be all bad or all good, I think.
Yeah, but it sounds like the value proposition is just less, that they're more efficient, the returns aren't as high, you can't command the same margins.
I think things are going to get more competitive. I think if you're going to have to constantly, if you're an asset-light business or you're a services company, you're going to have to be constantly evolving, moving in front. And if you do that well, you'll be able to monetize the cycle in a way that most people, in other cycles have been able to do. There's lots of companies that in the late 90s said the internet would be amazing for their business. There was incredible companies that came out of that, and there inevitably will be great companies that come out of this. But through that cycle from mid to late 90s to early 2000s, mid 2000s, there was lots of companies that didn't struggle, didn't pivot, were too bureaucratic, were too bloated, couldn't move quickly enough. And so, again, this is all about your talent, being adaptive, being willing to actually see what's on the field. And if you can do that, I think it's an incredible environment. And again, it's not private or public or equity or debt.
The kind of freak out over private credit has been this idea that maybe the industry is too exposed to those bureaucratic software companies that aren't going to be able to adapt. I know you get asked about wealth a disproportionate amount to actually how much that is of Apollo's business. But I do wonder for the funds, should there be a concern that some did over-index to things like BDCs, to wealth products? Is there going to have to be a rethink of that going forward?
We've all been in the asset management industry for a long time, and MLPs were exposed to energy during 12, 13, 14, and lots of MLPs didn't do great because they were exposed to that. If you're an asset manager that runs sector-focused funds, and there's very few of those will inevitably struggle if in fact software companies go through some sort of cycle. But again, most of the large managers that are public managers have been through this. It happened in the real estate business. You can see the ones that did it really well. I suspect that those firms will do an incredible job again. And you've already seen it. Earnings last couple weeks. It's been pretty calming. It feels like it's been, I think, most of these firms we know really well. They've done it a long time. They're going to do just fine.
There have been so many calls in this industry, though, for consolidation. And I wonder if we've seen the real pain for those that can't survive this, if that process is it has actually played out yet.
I mean, consolidation's so hard. It's a people business. Yeah. You know, what I love about our business is that just culturally, we just foundationally have not done a ton of M&A. And we organically build the business from the ground up. And that, in the investment business, particularly in times of heavy change, that cultural design is really one of your moats and one of your strengths. And so, unless it's very transformational. I don't see, at least for us, tons of M&A. But in the industry, if it's transformational, it can give you a new resource or a new asset class that you weren't in. Maybe you could see those firms merge. But the name of the game, I think, is, I'm obviously biased, is in the credit business. And I'm pretty biased. Two things. One, that we've been doing it for a really long time. And two, that we have no walls across everything. And so we're just one investment unit at the end of the day. And again, in times of increasingly more and more change, where the pace of change is much faster on the outside than it is at the inside of many of these firms, it's to have one aligned firm is a pretty strategic moat for us.
Do you think, though, that we get more firms that try to model themselves over diversification, that we get less sector specialists? I think this is about, 15 years ago, everybody, if you had a alternative firm, you could go into any asset class. There's now been kind of more specialization by asset class, but diversification by industry. And so most firms invest in almost every industry. For us, we've been leaning into infrastructure and credit and hybrid. And in equity, we've always been very value oriented. And so we haven't been caught up in most of this stuff. But again, I don't think there's going to be that big a pace of I think financial service M&A is hard. And so the bar is hard to get that done. And then for these wealth products, again, for those that are very exposed to it, it felt like a really big bullish thesis for this industry, that there was this untapped resource of wealth, of retail. Yeah. Do we rethink that as well?
Look, again, this is not about, I don't want to go down the rabbit hole on public versus private, but obviously, the last 30 days, public markets, 72% of the return was 10 stocks.
Yeah.
I mean, if you're talking about retirement and wealth products and what's the right product design, we can talk at length about what the appropriate product design and the pros and cons of all the product
Probably
designs.
Need another hour for that.
Yeah, but the idea that you would not invest and lend money to the companies that we lend to on a diversified basis for the long-term retirement is highly unlikely. It's very prudent to invest in income-oriented, long-duration products that generate yield over decades and decades of history. It's highly likely that you're going to make a good return on that. And so I suspect we're still very underpenetrated relative to almost everyone's retirement in the world in private assets. And that's the overwhelming theme. This is a moment in time around product design and some fears around over-indexing of a cycle in the industry. That will work itself through. And so not to say there won't be defaults, but again, when a stock goes down 70%, do you not invest in the stock market again? No. If there's a default in a high-yield company, do you not lend money to a company again? Like, this is a little bit overblown with respect to the reactions of every single company when we lend to 5,000 companies. And so when one situation goes wrong, it's hard to react too much to it.
So, John, before I let you go, I just have to, I know we're in LA, but I want to ask about your hometown of Miami. Might we see an Apollo Miami headquarters? I feel like you got to be advocating for that as a Miami man yourself,
my
right?
My family's there. I grew up there. I love Miami. But there's lots of good places. Both Texas and Florida have incredible options, and we're assessing that.
So the decision has not been made yet.
I do not think so. I do not think we've gone public with anything yet.
Okay.
So we're in the process of.
I still feel like behind the scenes you must be like wink, wink, nudge, nudge. Miami's a great place, guys.
Yeah, I do love Miami. It's a sweet spot in my heart.
All right, John, we'll leave it there. Thank you so much for joining. I really appreciate your time. And Matt, that was of course Apollo's John Zito.
All right, excellent interview. Great to get some time with John. Danny, thanks so much for that. Danny Berger is at the Milken Conference, and in the next hour, she's going to speak with Oaktree co-CEO Armen Panossian, as well as PJT CEO Paul Taubman. So definitely some interviews to stay tuned for. Let's get a check out what's going on in the stock market right now in terms of the average indexes, or the S&P, I should say. Really little change at all, but after hitting an all-time high at the close on Friday, so investors were willing to hold risk over the weekend. Right now we're trading at 72.27, and I finally lost that button here. Gonna need the seamstress. We're looking at stocks that are skewed to the downside in terms of breadth. So 176 up, 325 to the downside. The gainers include Micron, NVIDIA, SanDisk, Western Digital. So you're seeing all these chip makers here, as well as Amazon, Microsoft, Oracle, Palantir, so the AI plays, and GE Vernova should be noted as an AI play there as well. On the downside, Apple right now off a little bit more than 1%, as well as Google down 1%, AMD trading to the downside, so one chip maker off, and JP Morgan Chase is on the downside as well, so some of the banks falling this morning. Let's take a look at the sector breakdown with the GRR screen. You can see that we've only got IT and consumer discretionary gaining right now. On the downside, comm services, these are the big hyperscalers, as well as materials, staples, and energy falling. Coming up, are we in a market melt-up as stocks hit all-time highs nearly every day? Remember, it still could happen today. We've got a long time until the close. Alex Semenova from our stocks team joins us next. This is Bloomberg Open Interest.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start in the third floor or the lobby. You actually have to start in the basement.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories inform.
All right, so it's a busy day, busy day. Let's see. Looking at stocks today. Haven't really seen anything crazy. I mean, that's crazy. Doge was doing good and then we're down. That's called a market adjustment, I believe. Coin USA also dropped, but it's kind of recovering a little bit. That was at 10, 15, 12. Okay, so Solara is kind of steady on that path. Get my tablet working now so I can do this. So yeah, this line here is kind of saying up and kind of creeping, right? We think it's going to go up or down. Let's predict that. Let's see what happens. Stock market. It's our top performer. 1 month, 1 week, 1 month, sort of ascending. Well, that's okay, sort of descending then. Can America Corp. Stock screen. Of course, it's all part of the force to make me let's see. Where did that? Ah, there it goes. Where do we think it's gonna go? So we kind of went. I think there's going to be a crossover here. Maybe what do you think? Anyways, let's hear Bloomberg.
So that has really been the source of optimism. I was talking to Edgar Denny recently, and he actually said that the reason that we fell 9% during the sell-off during the war versus something like 16% is because people were looking to that earnings growth.
9%?
9%.
I don't remember us falling 9%.
I know, it feels like nothing ever happened. We're back at all-time highs and things are all good again.
All right, Alex, thanks so much for joining us. Alexandra Semenova writes about stocks for Bloomberg News. You can follow her work on your terminal or on Bloomberg.com. Coming up in the next hour, Oaktree co-CEO Armen Panosian sits down with Danny Berger at the Milken Institute Conference in Beverly Hills. Then we'll hear from PJT CEO Paul Taubman, and we'll discuss mixed signals from the U.S. and Iran and potentially false claims with Jen Gavito of the Cohen Group. This is Bloomberg Open Interest.
court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
ABC News. I'm Brian Clark. U.S. Central Command says that 2 U.S.-flagged commercial ships have transited the Strait of Hormuz. It's the first day of Project Freedom, President Trump's bid to help ships navigate the strait that's been effectively closed since the war began.
The U.S. continues its own naval blockade of Iranian ports, which has so far turned around 45 commercial ships, putting financial pressure on Iran. U.S. forces seizing at least one ship alleging the vessel tried to violate the blockade after 6 hours of warnings. ABC News now learning that the U.S. has transferred the 22 crew members from that ship to Pakistan to be repatriated to Iran.
That's ABC's Mary Bruce at the White House. The Supreme Court has been asked to weigh in on the Fifth Circuit's ban on distributing the abortion drug mifepristone by mail. That ruling came down on Friday, and Planned Parenthood CEO Alexis McGill Johnson says,
I think the goal here of the opposition is to try to enact a national abortion ban by any means necessary.
It's not clear if or when the Supreme Court will act. The social media giant that runs Facebook, Instagram, and WhatsApp back in court today in New Mexico for phase 2 of a trial.
If phase 1 was about money, phase 2 of New Mexico's suit is about behavior.
They're asking for the judge to impose certain sanctions and changes on the way Meta does business.
Attorney John Day tells ABC affiliate KOAT that if Meta is found to be a threat to public health and safety,
that's going to have an impact throughout the country on how Meta practices in each state.
Meta says it's already addressed many of New Mexico's concerns about the online safety of children. Jim Ryan, ABC News.
Meta's also threatened to suspend its operations in New Mexico. One of baseball's iconic radio voices has died. John Sterling was 87.
Yankees win. The Yankees win.
Called more than 5,000 consecutive New York Yankees games. You're listening to ABC. 13 people were injured in a shooting at a lake in Edmond, Oklahoma, north of Oklahoma City. Jason Hearn heard the gunshots. He said there were hundreds and ran to help.
There was one young lady that had a head wound but was still breathing.
Authorities are looking for suspects but say they do not believe there is any threat to the public. A tense interaction at Cornell University was caught on camera. Students at the Ivy League school claim the university president hit them with his car. The president said he was reacting to intimidation from the group. More from ABC's Aaron Katursky.
Am I allowed to stand here?
He just ran over my foot! This is the moment students at Cornell University said the school's president, Michael Kotlikoff, bumped them with his car. A debate last week about the conflict between Israel and Palestinians and how the university responds to student protests spilled into the parking lot. Aiden Velasillo said Kotlikoff backed into one of his classmates, then ran over his foot before driving off. In a statement, Kotlikoff said he was accosted by students with a history of verbal and online abuse and disruptive protest.
The NTSB is investigating an incident Sunday near Newark Airport when a United Airlines flight coming in for a landing struck a light pole along the New Jersey Turnpike that apparently hit a tractor trailer. The driver of the truck suffered non-life-threatening injuries. The NTSB is investigating. United said the crew has been removed from service. I'm Brian Clark, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube, streaming live on Bloomberg.com as well. Coming up, we're going to check in with Tyler Kendall, Bloomberg Washington correspondent, discuss the latest out of the Middle East. It is Met Gala Day here in New York City. That's a big deal. We're going to have the first look at the new Costume Institute exhibit after Christina Ruffini and David Gura interviewed the CEO of the Met. So we'll bring some of that to you as well. Rebecca Walzer, president of Walzer Wealth Management, will give us her thoughts on these markets here. And Ross Hamilton, chief operating officer at Space Networks, on broad impact of the SpaceX IPO on the space economy. Matthew Palazzoli, he covers the insurance companies, including Berkshire Hathaway. He was out in Omaha, Nebraska for the shareholder meeting. We'll get his thoughts from that, the first one without Mr. Buffet as the CEO, but he was there as well, so that's a good thing. It is Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. And now we go to Alexis Christoph. She's got a little bit of a Bloomberg Business Flash. Alexis, what do you have for us?
Sounds good. Thanks a lot, Paul. This Bloomberg Business Flash is brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500.
Okay, so cutting stream short today. I got an appointment.
Visit ibkr.com. We have got stocks that are mostly lower as oil continues to rise as traders have to sift through a bunch of mixed signals and headlines coming out of the Middle East today. S&P 500 down 3 points. Dow Jones Industrial Average, though, down about 200 right now. NASDAQ Composite dipping 3 points. Both the S&P and NASDAQ coming off record closes on Friday. We've got Brent crude up more than 2% at $110.70 the barrel. West Texas Intermediate crude up 0.3% now at $102.25 the barrel. The Bloomberg Dollar Spot Index, little change at 1193.93. And we've got spot gold down more than 1% at 45.58 the ounce. Shares of Norwegian Cruise Lines down more than 9%. It is the biggest loser in the S&P 500. The cruise operator cutting its full-year adjusted earnings outlook, saying it was hurt in part due to fuel costs that are soaring because of the war with Iran. And shares of eBay up 9% on news that GameStop is proposing to buy the e-commerce company for about $56 billion in cash and stock. That's a 20% premium to eBay's Friday close. We've got shares of GameStop down more than 5%. And after the closing bell, we're going to get earnings results from Palantir, Pinterest, Duolingo, and Sonos. And of course, we're going to cap it all off on Friday with the jobs report. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christophorous, and that's your Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Market Drivers today is brought to you by EisnerAmper. Most advisors tell you what happened. EisnerAmper tells you what to do about it. Assurance, tax, outsourcing, and advisory services for businesses that can't afford to guess. EisnerAmper.com, as Alexis was just reporting, a little bit of selling out there in the marketplace here today. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at?
Well, we can start off with FedEx. That's ticker FDX. Now currently falling about 6.5%, most since last April. That's after Amazon said it's expanding its logistics operation to businesses beyond its marketplace sellers. So this new Amazon Supply Chain Services will offer businesses access to transportation networks, which span the ocean, air, ground, rail, and freight. And important to note that firms like Procter & Gamble, 3M, and American Eagle have already signed up, which obviously could take a slight bite out of FedEx's revenue.
All right, good stuff. Number 2 on your list.
eBay, that's ticker eBay, currently up about 4.4% to hit a record intraday high. And that's after GameStop said it offered to buy the e-commerce site for $56 billion in after hours on Friday. Ryan Cohen said that he'd serve as CEO of the combined company if it went through. Truist writing that while he remains skeptical of the success of this pursuit, the bid is stunning.
Okay. I mean, I did not see that coming.
Me
Any
neither.
way, shape, or form.
Also, GameStop is tiny compared to eBay.
And they've got, I guess, some debt.
A lot of debt.
From TD Securities, they got a little bit of a debt pledge there that they can backstop some debt. I don't know.
But is the currency,
No.
is the stock worth that much? Like, do that? Is that a good currency for it to use?
No, I mean, it just means, they're 1/4 the market cap. They're going to need a lot of debt to make that up, and I don't know about that. But cool, it stocks up, so good for eBay. One more here.
Well,
Norwegian.
Yes, Norwegian Cruises, that's ticker NCLH, now falling about 9% to hit the lowest intraday level in a year. That's after the cruise line operator said that it's slashing its annual forecast and gave a pretty downbeat projection for the second quarter. It obviously has the Iran war to blame. Norwegian management is saying that soaring fuel costs are partially to blame. And more importantly, I found that Norwegian is forecasting its first annual decline in 2020. We all know what happened in 2020 to cause that. But Barclays is now writing that the guidance cuts were even the very low expectations going into the print. So we'll keep an eye out.
All right, good stuff. Avalon, thank you so much. Avalon Purnell is our equities reporter here for Bloomberg News. And of course, for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the equity market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. And of course, it's another day, and we need to watch what's going on in the Strait of Hormuz. My understanding is things have not actually improved. We're not getting oil through there, although there's a lot of movement taking place.
Yeah, and there's reports about whether some ships may have been under fire, and then the U.S. says no, that's not the case. So again, it just feels like another day of just uncertainty in that part of the world, and we see it in companies like Norwegian Cruise Line impacting their business, the airlines impacting their business. Of course, we see crude oil north of $100 a barrel, north of $4 a gallon at the gas tank. So these effects are starting to ripple throughout the economy.
Absolutely. For companies and for individuals and for investors, it means energy prices remain high. Tyler Kendall's watching all the movement there. She's our Bloomberg Washington correspondent, and she has the latest from what is happening in Washington. So, Tyler, kind of set the scene for us. What do we need to know when it comes to whether there is any kind of movement in the Strait of Hormuz and what the state of play is there?
Well, Scarlett, you guys were really hitting the nail on the head there. There were a lot of headlines this morning, but it appears that the upshot is the situation is still highly, highly fragile. We got out of CENTCOM a few hours ago denying a report from Iranian state media that any U.S. naval vessels had been hit. I was talking to an analyst about this Iranian media report that the U.S. says did not happen, and they said that they really viewed this as Iran trying to issue a warning shot.
There it goes. It's going up.
Still have a grip on the Strait of Hormuz after President Trump announced yesterday that the U.S. was going to begin to guide some commercial vessels, not all. The president says that this effort will extend to neutral vessels that he is calling, quote, victims of circumstance. CENTCOM later also said earlier this morning that so far 2 U.S. flagged merchant vessels have successfully transited through. So perhaps some positive indications there, though overall it doesn't seem like there is really much leniency happening when it comes to the standoff between the two sides, because Paul and Scarlett, Iranian state media, also said this morning that essentially the country was releasing a new map of what its control is going to look like when it comes to the Strait of Hormuz, basically saying that they're not going to give up quite yet.
Tyler, is there any discussion within Washington, D.C. about peace negotiations, perhaps sending another peace negotiating team from the U.S. to Islamabad or somewhere else to negotiate?
Well, at this point, Paul, President Trump says that the negotiations will continue by phone and that he doesn't want to actually send another in-person team until they get closer to some sort of deal. And as of now, the deal hasn't been sufficient enough for the U.S., though Iranian state media did report just yesterday that Iran was reviewing a U.S. response to its proposal that was put on the table last week. That would be this phased proposal Iran wanted that would essentially delay talks on its nuclear program until after the initial phase took place, which would be a deal to reopen the Strait of Hormuz in exchange for the U.S. lifting its naval blockade. The thing is, the White House has said that that is essentially a non-starter, that any agreement does need to include those curbs on Iran's nuclear capabilities. President Trump over the weekend said that talks were making progress, but he also said that so far he hasn't seen anything that will satisfy him. And actually, he didn't rule out when asked directly about whether or not he would take a resumption of military strikes off of the table amid some serious reporting that that could be an option that the president is considering in a bid to help get through what has so far been gridlock.
Yeah, so maintaining maximum optionality. Tyler, as far as the actual financial cost of this war so far, we've learned that the Pentagon says in the first, couple of weeks, or so far this year, the bill is at $25 billion?
Yep, that was according to the defense officials that were on Capitol Hill just last week. We saw U.S. Secretary Pete Hegseth and the chair of the Joint Chiefs of Staff, Dan Kane, testifying for the first time since the war began. But then there was some reporting, including from CBS News, that that number actually could be double that, closer to $50 billion. And these numbers, of course, are very large, and they matter in the context of Capitol Hill because we know that the administration is going to be seeking some supplemental funding specifically around the war. The figure has been changing because we haven't actually gotten that request yet, but that is closer to the $50 billion mark is where it appears to be landing according to the lawmakers that we've been speaking to. So it's going to be something to watch, but it's definitely adding to the pressure for lawmakers in particular as we have now crossed that 60-day threshold, but it doesn't feel like we are going to get that authorization from lawmakers, that the administration isn't going to formally request that authorization when it comes to continuing the war under the War Powers Act.
So that's kind of where I wanted to go, Tyler. What's the mood in Washington, D.C. about this whole war here? I mean, again, we crossed that 60-day mark. Is there growing frustration? Is there any pushback? Is there any questioning of maybe the goals of this campaign and maybe the opportunities to de-escalate or get out?
Well, at this point, Paul, Republicans have largely stood by President Trump when it comes to his military aims, but I think as we get closer to a supplemental funding request, then you may start to hear a little bit more pushback from Republicans that they want Congress to have a say in how long the duration of this conflict is going to go. The administration has been arguing because there's a ceasefire in place. They say that that halts the clock on that 60-day mark. There's some legal questions about that messaging there, but we know that the War Powers Act has been something that has impacted administrations on both sides of the aisle. So far, we've seen 10 war powers votes fail in the Senate. This last one that happened just last week was the first time that a Republican had crossed party lines since the war began. Senator Rand Paul of Kentucky has always been voting against the war, but we saw Susan Collins vote to go to the other side of the aisle. She's in a very tight re-election race, as we know that higher gas prices are going to weigh on the consumer as we get closer to November.
Good stuff. Tyler Kendall, thank you so much. Tyler Kendall kind of putting it all in perspective for us. We're still waiting a lot of movement here on the U.S. and Iran's negotiating teams, but there hasn't been a whole lot to report on recently.
There hasn't been a whole lot to report. The strait remains closed. They don't seem to be talking, so this feels like it's just stagnating right now.
The new normal.
Yeah.
Higher for longer oil prices is our new normal. This is Bloomberg Intelligence on Bloomberg Radio.
Go to Department of Energy. Let's see. Gas prices, gasoline prices. At 2023. $3.50 a gallon in 2022. So what are we, 50 cents off from 2022? Where's the current one, though? Average renewable diesel. $20.25. That's a dark blue one. Okay. Propane, it's way up. Diesels, yeah. So just plain old gasoline, though. That's $4.13 in April 1st of 2022. $4.70 a gallon in July 1st, 2022. So the prices are still lower than what they were in 2022.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:21 on Wall Street. I'm Alexis Christoforous from the Bloomberg Interactive Brokers studio. We've got stocks and oil mixed as traders follow developments coming out of the Middle East. Let's start with equities. S&P 500 up 8 points. Dow Jones Industrial Average slipping more than 100. NASDAQ Composite up about 46 points. Over in the oil pits, we've got Brent crude at $110 the barrel, now up 1.7%. WTI crude 101.65 the barrel, reversing an early gain, now down about 0.25%. And the Bloomberg Dollar Spot Index at 1193.53. As for some stocks in the spotlight, Tyson Foods up 1.25% after raising its full-year profit outlook. Strong protein demand, particularly chicken, despite struggles in its beef segment. Cryptocurrency-linked stocks are on the rise after Bitcoin briefly topped $80,000 for the first time in more than 3 months. We have shares of Coinbase up 6%, Robinhood up nearly 5%. And pain at the pump is just getting worse. According to AAA, the national average for a gallon of regular, now $4.46. That is up 35 cents in just 1 week. In case you've been keeping notice, Gas prices have jumped nearly 50% since the start of the war 9 weeks ago. That's your Bloomberg Business.
Which are still lower than 2022's prices. When Democrats tried to push EV vehicles without Elon Musk's participation.
CEO of the Met, Max Holein. We got the first look at the new Costume Institute exhibit, which opened Sunday, May 10th. Let's take a listen.
It is, though, always a very exciting moment. It is a moment where the a certain cultural scene, fashion scene kind of convenes here, celebrates. It's a big celebration for creativity, for the arts, for fashion, for New York City, and certainly also for the museum. It's our biggest fundraiser of the year, but it is, most importantly, really also the opening of our annual major show that the Costume Institute puts together. And what only few people actually know is they hear about the Met Gala, they see the exhibition, but the Met actually is one of the biggest and most profound collections of fashion. So we have 37,000 garments. The Met Gala provides the funds that are necessary to run a department, to run a collection, to really provide these ample services, not only exhibitions, but really also ample service of preservation of fashion history for our communities.
So it's not just about the pretty dresses you're seeing out there, it's about the ones you guys are trying to keep around.
We love the pretty dresses, we collect some of them, and if you want to, if fashion designers go somewhere for inspiration, it's going to be the Met.
What is the lead time to developing an exhibit like this? Is it year by year, or are you looking many years ahead?
So the preparation for these shows usually take more like, 2 years. Of course, some of these ideas have already been kind of thought through, kind of expressed, and especially in this case, Andrew Bolton, our head of the Costume Institute, of course, has various ideas and concepts that he kind of develops in his head until they can come to fruition. And so we've been thinking about this show probably now for about a little bit over 2 years. And importantly about this exhibition, it's only Met collection.
All right, that was Christina Ruffini and David Gura interviewing the CEO of the Met, Max Holein. They have a new costume exhibit there. So, and they got the Met Gala tonight.
That is a big deal.
That is a huge deal in New York City, and for the fashion world, it's it's like.
And also the tech world, because Jeff Bezos and his wife Lauren Sanchez Bezos are the hosts, or they're the
lead sponsor.
Lead sponsors, thank you. I mean, so they're kind of hosting it in a way, right?
Yeah, exactly.
Like
And that's got a lot
sponsor?
of people up in arms, and there are going to be a lot of protests. Basically, the takeaway is don't move around Midtown Manhattan or the Upper East Side if you can
that's a
avoid
good
it
point.
today.
Yes.
You've
Lots
covered
of
this
traffic. I've covered this when I was at CBS years ago for a few years in a row. Had the chance to, I had to get gussied up too. So big night for me to hit the red carpet. And I interviewed like Sarah Jessica Parker and Kim Kardashian, and everybody's sort of been always in a good mood and ready to talk about what it is they're wearing.
Okay.
But there's always a theme to the event as well, right?
This year it's fashion is art. So we'll see what people come up with. I think
Which
you
is
can go
very literal,
anywhere
given
with
that it's being held at the Met.
Yeah, exactly. I mean, not one of their more creative. But you know what? I actually looked up the list of people who have not been to the Met Gala, which I thought was very
Oh, I
interesting.
like that. Okay.
And, okay, so Jennifer Aniston, no.
She doesn't leave California.
No, it's true. She really does. Even though she's from New York. She actually went to my high school. We were in high school together at the same
LaGuardia.
time. Yeah. LaGuardia High School. She was a year
Bitcoin
ahead
is once again pressing against the
Leonardo
pivotal $80,000 resistance, a level that has repeatedly capped upside attempts in recent price action. The market now finds itself at a decisive moment, where a confirmed breakout could ignite fresh bullish momentum, while failure to push higher may trigger another wave of selling pressure. BTC tests critical $80,000 resistance zone. Bitcoin is currently positioned at a critical technical juncture that demands close attention. According to Cryptorphic, the price is actively testing formidable resistance situated around the $80,000 region. This psychological and technical barrier has recently served as a significant ceiling. The primary catalyst for a trend continuation lies in the daily candlestick close. A clean daily close above this $80,000 area would invalidate the prevailing bearish momentum and pave the way for a move into higher price discovery. However, the current price action is characterized by a slow grind into resistance rather than an impulsive breakout, suggesting a lack of immediate follow-through from buyers. A concerning development in this setup is the divergence between price and trading volume. While Bitcoin continues to notch higher highs, trading volume is notably declining. This suggests that the strength behind the upward move is waning, a technical signal that often precedes a sharp rejection or a healthy pullback. The outlook now hinges on whether Bitcoin can generate a high-volume surge to clear the $80,000 hurdle or if the lack of conviction will result in another rejection from this key resistance. Currently, the daily close is the primary indicator to determine the next market move.
Let's get back to this. What are they talking?
That's when we had a monoculture.
Yes, and now that water cooler culture is, for the most part, gone, but it shows you how. Rebecca, what's the conversation you're having with your clients these days? It seems like this war is going to be longer. Seems like the energy costs are going to be higher for longer, but the markets seem to be powering right through it.
Yeah, when you say longer, I just props my mind. Lower for longer, right? Now it's higher for longer.
Yeah.
So, I told clients from the very beginning, like with the ceasefire announcement, I was like, listen, this is not going to be, and I always use this analogy, straight up and to the right. Like, don't expect that. This is Iran. This is the Middle East. This is, a conflict that was almost 5 decades in the making. So it is not going to be a quick resolution. I think it's a really economic game of chicken right now. What's happening is Iran is thinking and calculating that Trump has to get this over because he doesn't want high summer gas prices when we're all traveling right before a midterm election. So that's their calculation, that he will fold. He's actually thinking that their country is economically collapsing with the naval blockade, and they can't get anything in except for through rail or car. And he's thinking they will economically collapse. So they're both waiting for this economic chicken game to end. And in the meantime, investors are looking at Mag 7 4 reports last week, and you're just like, wow, and the CapEx to reiterate that, we're going to not only have our CapEx that we thought, in Meta's case saying, okay, we're going to increase it, but it's because the components costs are going up so much. And the investors don't like to hear that. They don't want margin compression. They don't want those things. But yet the truth is $725 billion in CapEx in 2026. That is unbelievable. And it only tells us that this AI revolution is real, and it is not stoppable, and it's coming. And investors, it's okay to be a little bit apprehensive, but participate. Make sure you're participating in this situation, because if you don't, you're going to be like, oh man, I got out in the .com crash and I never participated in that technology game.
Well, I mean, you participate just by being in the market, by being in the S&P 500, and you get a lot of exposure because those companies are such a big part of the index. If you need to diversify, where do you go for that? I think about the K-shaped economy and what you just said, and it feels like a lot of the consumer companies, we're going to be trying to figure out who's the winners and losers. Norwegian Cruise Line not doing so well when the other cruise line operators seem to be holding up okay.
Yeah, that's a great question, and it just speaks to where is the actual economy, because you go to the mall and you're like, this cannot be a bad economy. There's not any recession coming at all. I think that what you have to be is invested, and you have to be
going to the mall. What? Who's going to the mall?
About the global underlying macro.
Kids still go to the mall?
We really are in the middle of a currency transition that has already begun. We are moving more towards a stable coin, blockchain type of, transactional currency. Those kinds of things are, still happening even as the AI tech revolution happens. If you look back at the chart and you look at when has tech done 20% in 1 month, it's only happened 2 other times, 1929, 1999. We're at all-time highs, and we've got another 20% run-up. Those are not good years, if you know what I'm trying to indicate here. And so what I'm telling you is that this is not going to be, AI is going to be revolutionary, but let's remember, capitalism is creative destruction. We're destroying the old way for the new way. And along with that comes, unfortunately, some things and ways that die. And we will see that. But for right now, Scarlett, I think that we just have to full force ahead, be invested, participate. And I would say that I would normally love gold and silver as hedged commodities, but anytime we're in kind of a Middle East conflict or energy conflict, they go on to risk-on status, because central banks have to raise liquidity, have to worry about how they're going to fund things. And so you have commodities, currency commodities go to risk-on, and they actually act like they're a risk-on asset. I mean, gold was at 4,800 when we had the ceasefire. It's retrenched back down now at the 4,500 level because, again, it looks like we're back into a situation that's going to escalate. So it's hard to say what those stalwarts of value will be because of the fact that these things do not always act exactly correct. But I do think that value stocks have a play, and I do think that retail is going to also be a winner this year, actually, as long as we can get inflation tapped back down if this conflict gets resolved quickly.
But fixed income, what's the allocation for your clients these days?
You know, fixed income is a hard issue right now because we are very aware of the 2022 and most of the world learned for the first time, oh, bonds can lose money, rising rate environment. And that's the thing. Like, you know, we have a new Fed chair. We have Powell staying on for his reasons. And that means that, you know, if you look at the FOMC calculator, the Fed Watch tool calculator for December, we don't even have a chance to have a rate cut this year according to the current calculation. That could change. We could get bad labor data. That could change. But as of right now, we're not even going to get any cuts. We're not going to get help. We're not going to get accommodation. We're getting quantitative easing. That's happening. They're cutting that back some. So the bottom line is it's really hard to go fixed income because if we get anything that would indicate higher rates, then you're in a situation where you just have bought into something that could then lose value. So I would say don't go long duration right now on anything.
What about private credit? Just very quickly, yay or nay?
I think private credit is overblown, and I think it'll be okay eventually. There's going to be some players that don't do well, but I think overall it's not going to be a 2008 situation that we have here. No, yeah.
Rebecca, thank you so much for joining us.
Thank you,
Appreciate
guys.
it. Rebecca
Thank
Walser.
you.
She's the president of Walser Wealth Management, joining us live here in our Bloomberg Interactive Brokers studio. Looking at the markets here, just kind of mixed. Not a lot happening, and that's okay with me. I don't need any more drama. S&P's up about 10 points. The Dow's down 70, and the Nasdaq's up about 41 points, 0.2%. Yields are higher, though, folks. 10-year Treasury yield, 4.4%. That's not good for the 30-year mortgage out there. Even on the short end of the curve, 2 years up 4.5 basis points, 3.92. And Tom Keene was calling out earlier. We hit 5% on the 30-year Treasury. That really gets
it's
your
very
attention.
close.
Yep, and so we'll keep an eye on that. This is Bloomberg. Good morning.
headlines and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:40 on Wall Street. I'm Alexis Christophers from the Bloomberg Interactive Brokers studio. Stocks are mixed and oil is stabilized as investors gear up for more earnings reports and, of course, the monthly jobs report due out on Friday. The S&P 500 up about 13 points. Dow Jones Industrial Average now down 97 points. NASDAQ Composite, though, up by 68. We've got the Russell 2000 adding 13 points. Brent crude at $111 a barrel, up more than 2.5%. West Texas Intermediate little changed at 102 the barrel. And we've got the Bloomberg Dollar Spot Index at 1193.42. In stock news, NVIDIA rivals Cerebras Systems looking to raise as much as $3.5 billion in an initial public offering to counter rivals in the artificial intelligence sector. And Berkshire Hathaway is now sitting on a record $397 billion in cash as operating earnings rose 18%. And Greg Abel's first quarter as CEO, founder Warren Buffett, at 95 years young, is still chairman. And finally, it is the end of an era at McDonald's. The fast food giant is pulling self-serve soda fountains from its restaurants nationwide over the next few years. But don't worry, you can still get your drink refills. You just have to ask the server behind the counter.
Hold on,
for it.
why? I thought they were outsourcing everything to the consumer, and now they're going to
Well,
not
they want to get a
outsource this?
handle on runaway refills, I think, and the such.
In-N-Out Burger still have the free refills.
There you go. And I know you're pushing for In-N-Out to come to New York.
I am.
Got to push harder.
I'm not a fan of In-N-Out burgers.
It's good. It's not crazy good, but it's good.
That's a ringing endorsement.
Well, that's an endorsement.
Yeah. Hey, I took my first Waymo ride to an In-N-Out Burger.
That is so California
That's
of you.
so California, right?
Yeah.
Okay.
Thank you, Alexis Christophers, with our Bloomberg Business Flash. All right, everyone is talking about the space economy and the space business because we have this big IPO coming up at some point this year. It's going to be massive, at least $1 trillion. Elon Musk's SpaceX at some point going to go public. So let's get a handle on the space economy, the business of space overall, and bring in Ross Hamilton. He's Chief Operating Officer at the Space Network. And Ross, thank you for joining us in our Bloomberg Interactive Broker studio. The Space Network is not like a TV network that broadcasts things going on in space. It's a company. And what does the Space Network do?
Yeah. Well, good morning. Thanks for having me. Yeah, so Space Network, we're a private company. We focus on helping space technology companies commercialize. So we help them raise capital, find customers, suppliers, partners, and talent. So as the space industry is really changing to more of a commercial focus, historically a lot of these tech companies have been dependent on government grants, national spending, NASA, et cetera. And so now, as we look to what the commercial sector looks like, it's very much about finding customers, not just at a national and government level, but actually outside of the space industry as well.
At least at this point, the evolution to more commercial space, it sounds like it's just the playground for billionaires, Elon Musk and Jeff Bezos. How else is space becoming commercialized?
Yeah.
Give us some examples where we might see that.
I've heard that said before about the playground. I think there's what a lot of people don't understand is a lot of what's flying in space and low Earth orbit actually runs our daily lives. So financial markets, global logistics, agricultural, climate, weather. There's actually a lot of infrastructure up there, and there's actually a lot of opportunity to do more unique things up in space. Now that SpaceX and Rocket Labs and other companies are helping us get to space, and it's more accessible, and they're bringing down the cost of space, particularly with the reusable rockets, there's actually more innovation that can happen. So two really good examples would be you're starting to hear people talking about putting AI data centers up there, right? There's a number of reasons for that. It's more efficient. You can process the stuff, off Earth. Another example would be a pharmaceutical industry. So because of microgravity, cellular growth, protein crystals, things like that actually grow differently, and it allows researchers to do research on Alzheimer's, cancer, dementia. And so there are solutions starting to evolve by doing that science up in space.
Okay, so that's a lot of potential things that we can look ahead to. This idea of putting AI data centers in space. Economically, I get the argument for it. In terms of logistical challenges, how does that actually happen? I mean, is that a 2030 kind of thing or a 2080 kind of thing?
I think it's a few years out. I think it's in 2 to 5 years. I don't think it's 80 years out. But I think it depends what we're talking about. If we're talking about things that immediately serve Earth, this stuff is happening. With Amazon and other people, Starlink, starting to really develop that infrastructure out there. That's absolutely happening. There are most certainly things that are going up into space now that are going to, in the next 5-10 years, help the pharmaceutical industry. So these platforms coming. The other thing that's really important to note is that the International Space Station is going to be, stop being used and serviced, and instead commercial space stations are going to come online.
Okay.
That's going to open that market up.
SpaceX IPO, Elon Musk, massive IPO potentially. That's kind of the reporting we're seeing here. I would think if nothing else, that would just expand the level of knowledge amongst non-space geeks to what all the opportunities are
100%.
up there. So how are you guys thinking about SpaceX IPO?
So I think it's an amazing opportunity. I think it is a pivotal moment. Taking the actual valuation off the table for a minute, because we don't know whether that's 1.5 trillion or 2 trillion, and it is a massive multiple of their revenues. I think the opportunity on the innovation side is actually really big. If you think about what he's actually bringing together, he's bringing his rockets, he's bringing AI, he's bringing chip manufacturing, he's bringing a whole bunch of stuff together. That is going to create a platform for more industrial applications, not just for this idea of Elon going to the moon. I do think it will cause, maybe to your point, other companies to wake up and realize there's a whole supply chain here, there's a whole market that's going to develop on the back of this. And I think the last point is, I think it is opening up the market's eyes to this isn't just a new frontier, this is a piece of infrastructure that's going to run the world.
So the fact that SpaceX will be going public sometime this year, is that going to cause a rush of other companies trying to list as well on stock exchanges?
I don't know if I would say that. I mean, I think SpaceX is a very special company in a number of ways. And I think by many, many standards, it's far ahead of many other companies. There are many other great companies, don't get me wrong, but what SpaceX is doing is particularly special. I think it will open up the questions for more specialized technology companies that are in that supply chain. But what the IPO market's been like anyway for the last few years, I think we would have to wait and see.
What's the role of NASA these days?
Oh, good question.
Okay, so that's evolving. That's a great question. So if with Artemis that just happened with sending the 4 astronauts around the moon, that's part of a stage, that's part of a phase of where we're going from more exploration. And really what Jared Isaacman has said is that NASA's going to focus more on deep space exploration.
Okay.
And it will be a customer of these commercial platforms that go up to low Earth orbit. So, for example, they will not be running these new space stations when the ISS is done, right? They're going to be a customer of it.
Okay.
Interesting.
And given that that is NASA's role, kind of taking a backseat to private companies, where does that put the U.S. versus other countries in the global space race?
Well, that's a tricky one. I think in terms of the normal things you think about, the U.S. is a leader, and I think most of the world, maybe China, think towards the U.S. in terms of where all the innovation, where the capital is, where the market is, where the customers are. I think when it comes to two things, national defense and global security, I think there's some geopolitics in there. And the other thing is that off Earth, there's actually going to be a new space race involving China and Russia and India as they all try and get to the moon first. That's actually where NASA will be involved. But that's where a real national identity, national race is really going to happen.
All right, very fascinating stuff. I mean, I grew up with the NASA program and the Apollo program and that kind of stuff, but now it is certainly becoming more commercialized.
Yeah, it's taken a backseat, and I'm glad you asked about NASA because it feels like they were just out of the loop for a while.
The public-private way is
I think one of the differences, and Jared has talked about this, is that it used to be years and years and years before you would see a next mission. He's turning that from years into months, and he said that you're going to see that speed put, but that's going to require that partnership with the commercial sector.
Yep.
Ross Hamilton is Chief Operating Officer at Space Network. Thank you so much for joining us today in studio, and look forward to having you back with us when SpaceX eventually goes public.
Yeah, a monster deal. Can't wait to see that. I think the market's ready for that. S&P up 10 points. The Dow's down 170, but the Nasdaq's up 80 points here. The Tom Keene VIX safely below 1817 spot 3 there. Yields are a little bit higher here this morning. This is Bloomberg.
All right. Well, Sol's going up. Bitcoin is up. Dogecoin is way down. It shot way down. I shouldn't have bought. Yeah, that was a buy this morning. So, oh well. Got some now. All right. We are going to be closing out a little bit early today. I've got to take my car in to get it worked on. Let's see who's alive. Calden is alive. Kronos is alive. Carnage is alive. Who am I following that's up? All right, Keldon is freaking amazing, so we'll raid him. All right, then I'm gonna wrap it up. I got about 5 minutes, but I'm gonna kick out of here early so I can get ready, get the car ready. We're gonna go raid Keldon, and have a great day, everyone.
This is Super Space, y'all. We got lots of music, technology, and more. Come on!